Okay. Anything you could add. So people say, well, what if we put on the 100 or the 20-day moving average? You can put anything you want to on a candlestick chart. But remember, the most relevant indicator is the signal itself. Everything else becomes a confirming indicator. So observe the obvious. There was a support level right here. And then on Thursday, notice what it did. It came back up to the T line and failed and did a doji. Now remember what we just said about our doji rule. The probabilities are extremely strong that the price will move in the direction of how they open after a doji. So this becomes a doji sandwich, because if we use the doji rule and it opened lower, what was our expectation? That this candle right here was going to be the same magnitude as this candle right here, with the doji sandwiched in between. What did that tell us about our support level? It wasn't acting as a support level. This told us when it opened lower, we could be shorting it immediately, because we knew the likelihood of the magnitude of this candle as being the same as this, telling us this level was not acting as a support anymore. Where was our next likely target? Could be all the way down here to the 200-day moving average. Zim was one of our recommendations to short, because there's the kicker signal. It opened lower and traded lower. It didn't support at the 200. Thursday, it traded lower. Friday, it did a doji. Right here at about the same level it bottomed out before. So do we stay long? We've got a very simple rule. If it opens lower, it's going to trade lower, probably the same magnitude as this, telling us this level is not acting as support. It's still got a lot more downside. Conversely, if it opens positive, doji rule says it's going to trade positive. What's that tell us? It hit a support level. If we were short, we start covering our short position. So everything that is built into a candlestick chart is just merely common sense investor perspectives put into a graphic depiction. So Tesla, notice how it's rolling over, did a doji. So what's our logic for Monday? If the markets open lower and this one opens lower, where's it likely to go? Your bearish doji sandwich, implying wave 3 to the downside, is about ready to start. So this is what I call 2+2 analysis. Meaning, if we can see that we're in an overbought area and we have an evening star signal. An evening star signal is a 3-day pattern, a bullish candle, a day of indecision. In this case, the indecision was a little shooting star signal. It could be a doji, it could be a hanging man, something that shows indecision. But the third day of a evening star, or morning, this should be evening star signal. I did it. The third day of an evening star signal is that it closes more than halfway down this candle. Now that halfway point is very important for the candle, or for the Japanese rice traders, because logic says if the bulls are in control and then there's a change and the bears can close it more than halfway down the candle that told us the bulls were in control, that's a good indication the bears are in control. So that becomes a sell signal. But what else can we put into our instant visual analysis? Where did the sell signal occur? Right smack dab at the 50-day moving average area that everybody else is watching. Stochastic's rolling over, and it closed below the T line. That told us we would definitely be out of long positions. And if we are planning to go short, we could short on any weakness next day. And in this case, shorting it the next day also broke this little uptrend, What's that also implying? That our downtrend has a high probability that we're heading in the right direction or in the bearish direction. Same thing with net. The first observation is, which direction is this overall trend? It's in a downtrend. Now we've got it rolling over. There's our evening star signal that failed right here at the T-line. Friday, they gapped it down. What did that tell us? This level right here has now become wave 1, wave 2, wave 3 tells us there's going to be a lot more downside. So I tell people, you don't have to be a sophisticated technical analyst to utilize candlestick signals, because the graphics tell you exactly what's happening in investor sentiment. But that doesn't preclude using other technical indicators. Some people like to use Bollinger Bands, Fibonacci numbers, trend lines, support levels. The first criteria is, what is the signals and patterns telling you? Then anything else that you add on to your chart will hopefully improve the probabilities that those signals and patterns are working correctly. So here's what we're looking for. Now, I've got a chat room on our website. We usually have about 175, 200 people in it every day, but they're all looking for the same thing. So there's very simple methods for identifying a pattern breakout. One, very simple scans every night. Even if you don't know what you're doing, in less than 20 minutes, you're going to be able to find the best possible trades the next day. So there's our fry pan bottom. There's a breakout. That told us there was something new going on in this stock. Now, I didn't identify this, but in the chat room, somebody said, look at AERC, it's breaking out. That becomes my second source of finding great trades. When it broke out, that told us, one, there's your breakout of a fry pan bottom, which usually occurs at the beginning of the fry pan bottom. Two, was breaking out through the 50-day moving average, which tells us that wasn't acting as a resistance level. That put us in, everybody in the right position in the chat room. Now, my rhetorical question always is, does every move like this produce huge profits? The answer is obviously no. But what it does do is put you in situations where the probabilities of being in big price moves are greatly in your favor. Now, here's another illustration of this type of chart. This is telling you there's strong bullish sentiment coming back into this trade. This was Friday. This is still the result of this strong bullish sentiment, because obviously what did the markets do on Friday? They were down 800 points and they were still buying this. Now, how do we know to stay in something like this? Because the candlesticks are telling us whether there's bullish or bearish sentiment coming into these trades. Again, notice on this chart, fry pan bottom. Here's one of the benefits of here's three benefits of a pattern situation. One, the pattern isn't all of a sudden a change of investor sentiment. It's a buildup of investor sentiment. Two, it tells you that the probabilities are extremely strong. I guess I should say it. Number one, it tells you the probabilities are strong that you're heading in this direction. Two, because it's a pattern, it's telling you the magnitude of this return is going to be extremely good. And three, it is not subject to the influences of the overall market trend. You can see what this one did on Friday with the market selling off. That's because the buildup of investor sentiment that's creating a pattern is going to be a lot more influential than what the overall market is doing. This is called a bobble breakout. One of our patterns is what we call a J-hook pattern. J-hook pattern is wave 1, wave 2, wave 3. Wave 3 being the same magnitude as wave 1. We call this a bobble breakout, which is a more defined J-hook pattern, because look where they started selling, right here at the 200-day moving average. But then notice what was happening here. The T line was acting as a support level. And then when it came back up through this level, what's it creating? It's creating our J-hook pattern. But why is it more definitive? Because everybody and their brother is watching to see what's happening at the 200. We're a little bit better prepared knowing that if it goes up through the 200, it's creating our J-hook pattern, which usually creates another strong price move. And once again, notice what this one did on Friday with the market selling off. So the patterns produce a much stronger influence of a trend that's not going to be reflective of what's going on in the overall market in general. All right, so this is candlestick logic. When you look at a chart like this, it's very simple with one visual glance to take into all these considerations. One, if we know what the overall market direction is, heading down. Two, we know Etsy's been heading down. Three, we can see there's kind of a bearish J-hook pattern setting up. Four, there's our bearish best friend that tells us there's probably a lot more downside. Five, we got the stochastics rolling over. And six, it's probably coming back to the bottom of the trend channel. There's our target. All in one glance, we can see where that this is a very good bearish chart pattern. So again, you don't have to be a sophisticated analyst to take advantage of the information that is built into candlestick charts. That's what I call candlestick logic. Now, the reason I use candlesticks is because before candlesticks came along, I was the worst investor in the world. I was even a stockbroker for 8 years. I got out of the business because I was looking for somebody or a broker's broker or an analyst that could show accurately what, or with a good sense of probabilities of what the price movements were going to do. And there wasn't anybody. And when I mentioned earlier, when I started looking at candlestick analysis, the first major aspect that kept hitting me was, this makes sense. And the more I looked at it, the more sense it made. So with that, I'm done a lot earlier than I expected, because usually we have questions going on as we go through this. Are we supposed to do a promo or not? We do have a promo there. You can come to our chat rooms or our website for a 2-week free trial. And the reason we give a 2-week free trial is because the logic and the common sense that is built into candlestick analysis is so obvious that if you look at it for a couple of weeks, it doesn't matter what trading program you're using. The nice thing about candlestick analysis is if you're using a successful trading program or using somebody's program, if you put candlesticks on your charts, it's going to make it that much more clear whether that program is confirming correctly or not. So I tell people you don't have to overanalyze candlestick signals. I always kind of illustrate it by the fact that, or by the story of a lady that brings her parakeet into the vet and lays it on the table and said, I think there's something wrong with my parakeet. Can you check him? And he says, ma'am, it looks like your parakeet's dead. She goes, oh no, he's been my best friend for years. Are you sure? Can't you do something to make sure? He's just been such a good friend. I hate to lose him. And he goes, all right. So he goes out to the back of his clinic and he brings in a cat, lays the cat next to the parakeet on the table. The cat sniffs the bird, kind of looks up at the vet, shakes its head and goes, ma'am, I'm sorry, but your parakeet's dead. She goes, oh no, are you sure? Isn't there something? He's been such a good friend. I'd hate to lose him. He goes, all right. So he goes back to the back of his clinic again, brings in a great big Labrador retriever, comes bounding in, puts its paws up on the table, sniffs the bird, looks up at the vet and shakes his head and goes, "Ma'am, I'm sorry, your parakeet's dead." She goes, "Oh no, that's terrible." So they go up to the front desk and he says, "Okay, well, that'll be $250. She goes, "You're charging me $250 just to tell me my parakeet's dead?" He goes, "No, ma'am, I would have done that for 18 bucks. But then you wanted a CAT scan and a lab report after that." So I always tell people, you don't have to overanalyze candlestick analysis. It's just common sense graphics put into a graphic depiction. So, all right, we're done pretty early. Are there questions?
Steve, I didn't see any popping up, but I do have one. I'm a novice at candlestick trading here, but your J-hook pattern, can you describe what maybe a J-hook pattern is versus a cup and handle? Because to my eyes, they look very similar. So is there a difference, or is it just something that folks might just name differently? I'm not sure, pardon my ignorance.
Okay, J-hook pattern is just a wave 1, wave 2, wave 3. You can see a wave 1 right here. Then you can see it pull back. And there's your kind of your J-hook. And we can identify it much more clearly because of the T-line. The fact that the T-line seemed to act as support and started back up told us they weren't selling this off. Get ready for the next move to the upside. So a J-hook pattern is just this J-hook right here. And we know that wave 1 and wave 3 are the same magnitude. I don't know, well, you could kind of, I don't know whether you would call this a cup and handle, but a cup and handle, let me finish this. So even if you've missed this move and you started watching to see what was happening here, you could take advantage of this move because you know the magnitude of this move is usually the same as this move right here. Let me go back and see if I can find the fry pan bottom. So your cup and handle, and this one didn't quite do it, but your cup and handle is usually a fry pan bottom and then a little cup or a handle right here.
So what you're saying there with that fried pan bottom, if it were going to create a cup and handle, we would need a little bit more of a downstroke kind of right around where your cursor is, or just a little bit right of that to create that little handle. So
right. And okay. It doesn't matter what you call it. I mean, yeah, when you see a fry pan bottom in this handle, it's a cup and handle. That's observable. Okay. If you see a fry pan bottom, we also have the final criteria that as long as this doesn't close below the T line, we're still in an uptrend. And when I stress that point, that as long as you don't close below the T line, the probabilities remain extremely strong. You're still in an uptrend. Now, why is that important to us? Look how it opened right on the T line and traded higher. Look how it came right down to the T line and traded higher. It's not like everybody's watching to see what it's doing at the T line, because nobody has the T line on their chart. They've all got the 200. They've got the, the 200. They've got the 50. Some people have the 100. Some people have the 20, but nobody has the T line. So the fact that nobody has the T line on their chart and the number of times you see it come and bounce off that level, that's a pretty good indication that that is a natural support and resistance level of human nature.
Great answer there, Steve. Thank you. I got another question here. One of them is, how do you deal with sideways trading market or sideways market?
Okay, let me go back up. This is exactly what it reveals for you. Something like this, would I be long or short? No, because what's it telling us? We don't have any direction. So here's the whole basis for candlestick analysis. Let me go to another chart, or this one starting. It's telling us I wouldn't be long or short. I wouldn't be trading net in here. because there's nothing.
Hmm.
The whole point of candlestick analysis is finding the prices that are starting to move. Let me go zippy back up here somewhere. So you've got different, I'll get there. Trying to find the indexes. Same thing, I'm going to go back to this one. A dumpling top. Dumpling top, you couldn't trade. It's junky, sideways. It's when they break out that tells you have the big price move. And that's the same, that's the whole point of using candlestick charts to tell you what the trend is. If you're in a sideways, well, let's do it this way. What's this trend telling you? You're in a downtrend. What's this telling you? You're probably popping up into an uptrend. What's this trend telling you? It's going sideways. That tells me I probably don't want to be long or short, or if I've got, again, all my money management is to keep my emotions out of my trading. So I might limit my portfolio to 10 positions. Here I might be 8 short, 2 long. Here I might be converting from my short position and rolling back into long positions. Here I might have 5 short and 5 long positions, or sitting in cash. Because the whole point of candlestick analysis is that it gives us the advantage, of telling us which way investor sentiment is moving. If we can't see on our chart which way it's moving, that's exactly what it's telling you. The market doesn't know which way it wants to go. Let's just kind of sit for a little bit and find out which way they are taking it. So just because a market is moving sideways doesn't mean, or a trend is moving sideways, that doesn't necessarily mean you want to be in it. And the reason for that is supply and demand. There are 9,500 trading entities out there. On any given day, I can do a scan in less than 7 minutes each afternoon and find the 3, 5, 10, 15, 20 best bullish charts, or 3, 5, 10, 20 best bearish charts. So obviously, if I think we're in a sell with a major sell signal, I'm going to be scanning for the best bearish charts. If I think we're in a reversal, I'm going to be scanning for the best bullish charts. If I'm in something like this, I'm probably not going to be going long or short unless there's a very compelling chart pattern somewhere that tells me, well, this is something's breaking out in spite of what the market is doing. So I guess the answer to that long dissertation was, if you see something moving sideways, you don't have any benefit of knowing whether you're going up or down. Don't be in anything. Wait for the next information.
That was a great answer. Thank you very much. While I'm reading this next question, can you try and find your Intel page that you had there?
I think
so. We got a question here. It says, with Intel, you had the trend kicker on June 3rd, but June 6th and 7th seemed to be a fake out. Was June 8th the better buy date because Intel was clearly below the T line? Thanks.
The answer to that is very simple. There was our kicker signal. That was a confirmed signal. Then what was telling us, why was this not a fake out? Because we were still below the T line. And this is the thing I'd stress to our people in our chat room, that as long as you're trading below the T line, the probabilities are extremely strong that you're still in a downtrend. So if I had shorted this in this area, this wouldn't have scared me. But if it had opened positive the next day and started trading back up, yeah, I would have closed out my short position. Because what would it be doing at that point? It looks like it's starting to kind of a J-hook pattern. But the decision-making process is the combination of the candlestick signals. Now, here's another relevancy to that kicker signal. When they do a kicker signal to the downside, the probabilities are extremely strong you're going to be in a downtrend. So the fact that they couldn't close it up above the T line after a kicker signal was still taking that influence of a kicker signal heading to the downside. Wouldn't have been uncomfortable at all. That was just an up day and a downtrend, looking for more downside.
Thank you very much. One last question that I see right now is, are patterns more common in shares or stock, I guess, than ETFs?
No. They occur every place. Remember, we're not looking at patterns for some specific trading entity. Patterns, signals, all work because human nature works the same way no matter what you're trading. So, but that does give you an advantage that if you see a bullish pattern setting up in an ETF, let's say it's the biotechs. Let's say you're seeing a bullish pattern setting up in Labu or one of the biotech ETFs. That tells you, oops, there's buying coming into that area. So what's your next step? Now, instead of, if you want to be conservative, you could buy the ETF. If you want to be more aggressive, you look to see what stocks are in that sector, and you start scanning to see which one of those stocks have had the strongest signals. And they're the ones you're going after. So essentially, if the market's heading up and you can see a sector is heading up, then you can go and see which stocks in that sector are showing the strongest signals. So that basically, again, is putting all the stars in alignment.
That's great. Steve, I probably could listen to you all day. Literally, I love candlestick trading, and you've probably forgotten more about candlestick trading than I've ever learned. So I do appreciate you really helping us all out with this, because what you said earlier on with taking the emotion out of trading is absolutely correct, because that is, I think, what most traders struggle with, is thinking about it as money rather than levels or just ins and outs, if you will. So I really appreciate you helping us out today with this information, because I think that everybody has something to take away from here.
All right, well, great. As I say, after being the worst investor in the world, I came across candlesticks, and it's just logic put into graphic depiction. Now I consistently take money out of the markets, because every time I put on a trade, I know the probabilities are in my favor that that chart pattern or that signal is telling me something.
That's great.
All right, well, thank you for the invite. Everybody have a good weekend.
Hey, Steve, before you roll out of here, will you make sure you flip me back over to the host so that I can take control here?
Ooh, okay, let's see. How do I do that?
There should be a little green box that dropped, 3-dot box over your picture that I think that you can click on that. We might need to have Patricia come in and help us out too.
Let's see, choose background, whoops. Mute my stop video, blur my background, pin, rename. Let's see.
Try down there on that.
Okay. Hi, thank you, Steven, so much for that presentation. I already have control of being the host, so I'm gonna make you host, Eric.
Okay.
Okay.
You're now the host. Thank you.
All right. Thank you, everybody. I hope you got some good information.
Appreciate you, Steve. Thanks.
All right.
Okay. All right. We're going to be moving on to our next presenter. I believe I'm going to be able to share this. All right. I think that I've got this set up correctly now, that we'll be able to do this pretty seamlessly. All right. Let's move on to our next guest here. This is going to be Peter Schultz. He's been an active trader and instructor ever since the mid-90s. He is the primary contributor to wealthbuilderpublishing.com. This website is amazing because it specializes in financial freedom strategies attainable by the average person. Peter has over 25 years where he's been speaking to folks like you and I about options trading and popular options strategies. So he's got winning secrets that he's written. He's also written the greatest option strategies on earth. So please take a moment to give Steve an introduction here, welcome introduction. Don't forget to ask questions. I'll be keeping an eye out there for you guys on those questions. Let me try and find Steve in here.
Actually, the name's Peter.
Oh, sorry. I have Steve Bigalow on my head. Peter, I am so sorry. Peter Schultz here has been an active trader for a very long time. You guys are going to learn a lot here in the next hour. So I will give control over to you. I believe that Peter, I'm not finding you at the top here for some reason right now. I saw you earlier, but there's so many people on here now that here we go. I've got you and I'm going to make you a co-host here. Let's see. I think that you have control now. So you'll be able to share your screen and take us away.
Okay, thank you very much. I appreciate that. Let me just get queued up. And what I'm going to do is I'm just going to kind of cruise pretty quick here. I've got a lot of information to cover. I really appreciate you having me. There's a lot going on in the market, so there's a lot to take a look at. And then if you could just, if you have a question, I really appreciate you asking it. I'd love for you to just to write it down, and then I'm going to have some Q&A at the end. And delighted to answer anything, but got a lot to get through in a short amount of time. So what we're going to be talking about is the 3 best ways to make money in a bear market. And they may not be what you think, but they can make you a fortune. And so let's just take a look. First of all, my name is Peter Schultz. Appreciate the introduction. I've been trading, helping traders lose less and make more since 1996 for so a long time. If you want to see what we offer, go ahead and go to wealthbuilderpublishing.com. And we've got everything there for you. So first of all, I just want to say I love bear markets for one simple reason, and that's because stocks fall faster than they rise. So knowing that, and knowing that it's that movement that makes you money, you can make a lot of money in bear markets. And there's 3 ways that traders typically trade or use to make money in bear markets. And we're going to go over all 3 of those right now. And then we're going to see if we can actually improve on them quite a bit. So the first one is selling short. And this is where you sell a stock to open a position with the plan of buying it back later at a lower price to protect the difference. So this is the most common way to short the market or to make money on a down market. It's what you always hear about fund traders doing. It's what stock traders do. But there's some problems with this strategy. For one thing, it's pretty capital intensive. So even if you're doing this on margin, you have to come up with half the price of the stock. So if you want to short something like Tesla, that's a lot of money. And another problem with this strategy is you can only make the difference between your selling price and 0. So that's a theoretical difference of 100%. Nobody ever lets it go that far. They always cover before that. But on the upside, your profit is limited. But the stock can go, can theoretically go up infinitely. So it's really creating infinite risk. So let's see. And then the second one that a lot of people do is, excuse me, let's go back here. They buy inverse ETFs. So an inverse ETF is something that is designed to go down when everything else is going up. So in this case, the example is the SH, and that's the inverse ETF for the S&P 500. So you can see that recently, the problem is the derivatives that allow that that inverse action cost money. So those derivatives are futures. They use different things, but they actually put a pretty big load on the ETF. So over time, it goes down, and it's actually guaranteed to go down over time. And you can see that here, the SH has lost 57%. then all of a sudden at the beginning of 2022, the market starts to crash, and this is your time to make it all back. Well, the problem is it's only gone up 13%. So it goes down a lot, and then when it's your time and it's going in your direction, it doesn't go up that much. So, you know, that's a little bit of a problem. They're great for 1-day gains or 2-day gains. If you can pinpoint the market that closely, you can make a little bit, but they're really losers over time. And I'll give you a little inside secret here. A lot of guys have won trading contests by taking the regular version of the ETF that goes up, say, 2 times when the SPX goes up 2 times, and then they take the inverse ETF and they short both of them. And they're kind of like guaranteed to make money. It's completely agnostic as far as direction, because they're, you know, they're short the inverse and the regular, and, you know, they just go over time. So it's kind of a guaranteed money maker. But for shorting for a bear market like what we're in right now, probably not the best way to go. So the third one, and this is probably the most popular, especially right now, is buying puts. So this is where you buy a put option on a stock that you think is going down. And of course, buying a put option gives you the right, but not the obligation to sell the stock for a given price and for a set amount of time. There's 2 problems with this. And believe me, I'm not putting down options trading. I've been an options trader for over 25 years. This is how I make most of my money, or traditionally how I have. I'm going to show you something in this presentation that has made me more money than anything my entire life. And this is going to blow you away. And boy, I hope you take advantage of it. So the 2 problems with buying puts is when stocks are falling, the put implied volatility goes through the roof, making your put options very expensive. And they can get so expensive that sometimes you can be right on direction and still lose money due to volatility collapse. And that's super, super frustrating. I don't know if that's ever happened to you. If you're an options trader and you've traded options any length of time, it probably has. But when you're right on direction and you still lose money, that's frustrating. So the second problem is because the option has a set amount of time before it expires, the moment you buy it, the clock is ticking and the time value of the option is decreasing. Unless your timing is excellent, it's easy to lose money buying puts, especially if your target stock suddenly reverses and are just dramatic, violent reversals in bear markets, kind of typical. They really almost characterize bear markets, and you never know when they're going to happen. So, you know, you can put a trailing stop on your put. You can do some different things to try and mitigate that. But buying puts can make you a lot of money. It never seems to make you quite as much money as you think it's going to. You know, you think you're going to double, triple, quadruple your money. And a lot of the time, if you're making 50, 60, 80%, you know, you're doing really well. Unfortunately, you're taking on quite a bit of risk to do that. So how can we make it better? We're in the throes of a big bear market now. If you look at the fundamentals, it's kind of looking like this bear market is going to continue. The Fed is obligated to raise rates with this kind of inflation, and they've told us that. There's no mystery. One of the things I like about the Fed is they're pretty darn transparent. They tell us what they're going to do, and they're telling us they're going to raise rates at least the next 3 meetings, at least a half a point at the next 3 meetings. This is going to have an incredibly detrimental effect on stocks for a bunch of different reasons. So we're probably going to be in this bear market for a while. So instead of sitting around and wringing our hands together and clutching our pearls, why don't we figure out how to, you know, come out of this thing looking really, really good? So what are better ways to trade bear markets? So the first one I want to talk about is selling credit spreads. I love this strategy. It's absolutely our bread and butter. Built a whole trading system around this. And here's what it is. If you're not familiar with it, and I'm going to get my little pen here. So what you do is, you know, I obviously identify a trend. We've got a trend that's going lower and pretty easy to identify here. We have a nice rebound. And we saw that. That was a really nice, powerful rebound. We also have what is obviously very, very stiff resistance. So In a bear market, under these conditions, with the Fed getting ready to raise again, kind of doubtful that this thing is going to run to the upside and just keep right on going. So what we do is we sell a call spread right here, and we take in some pretty good money. Now, we don't want to just sell that naked. Otherwise, we had to have infinite risk all the way up to the upside. So what we do is we buy, and so this actually costs us money. We buy another option to hedge. Now, our only risk is the distance between these two strikes. Now, the one that we're selling is more valuable, costs more because it's closer to the underlying than the one that we're buying. So it creates an immediate credit in our account. Now, what's cool about this is the probability. So we've got the trend in our favor. And because we're doing this on a little spike, we happen to sell this particular spread. This is one we actually did last week. And we sold this particular spread on this little spike right here. So the volatility, the implied volatility is in our favor. We collected some pretty decent money. So we took in 45 cents on our $2 spread, which leaves us a $1.55 margin hold. So that's what we divide into. That's sort of our risk. And I show you ways to never risk that much. But just for the sake of a calculation, that's what we're going to divide our profit into, or a potential profit. And that is a 29-cent return with an 80% chance of winning. And we're doing this anywhere from a 10 to 17-day time frame. So the really cool thing about this is this happens to be on the Qs, the QQQ. As you can see, I mean, we did this right here on this green bar right here, and the market's trading sideways. Don't really know what it's going to do, but all of our indicators are telling us this thing's going to roll over, and roll over it did. So this is Friday's candle right here. And this thing is already pretty much worthless. So we could close out of it right away if we wanted to. We don't have to let it go all the way to expiration. We can lock in our profits. I love this strategy for a whole bunch of reasons, but the one that I like the most is that you just consistently win. And I'll tell you, back in the early days of my options trading, all I was doing, like everybody else, was buying options. I was thinking that my biggest problem in life was going to be figuring out what color my Mercedes-Benz was going to be. And I found out too often the stock reversed, or something happened, or something zigged when it should have zagged, and I'd end up losing money. Ever since switching to selling, becoming a seller of options, I've just won consistently, and it's so exciting. I put a lot of education into showing other people how to do that. And there's a lot of little tricks you can do. But when you do this, when you become a seller, our service is called The Winning Secret, and I'll just let the cat out of the bag right now. The winning secret is becoming a seller instead of a buyer of options. But when you do this, you have so many chances to win. And I think the best way to look at this is to see what a stock can do after you put on a trade. So a stock can only do one of 5 things. So once again, we put on the trade right here. This is when we did it. And once we do this, the stock can, one of the things it can do is it can drop dramatically. And that's exactly what it did. Well, if that's the case, we make maximum profits on this trade. The other thing that it can do is it can go down a little bit. It can just kind of fade. And if that happens, we make maximum profits on this trade. The other thing that it can do is keep doing what it has been. So for the last couple of weeks, it's been trading sideways. And let's say it just continues to trade sideways. We make maximum profits on this trade. The other thing that it can do is the trade can actually go against you. So we were thinking that this was going to go down, and let's say it doesn't go down, it goes up. But it doesn't go up dramatically, it kind of goes up gradually. So that's the first thing that it can do. If that's the case, we make money. We make maximum profits on this trade. The only way we lose is for this trade to go straight up, or the stock to go straight up after we do the trade. Now, what I'm going to show you is, instead of, if this was to go, if the underlying was to go all the way through, you'd have that maximum, you'd have that loss, that $1.55 loss. But here's what's interesting. If we set a stop to close the trade right here, we actually cut our loss in half. And that's pretty exciting, because it just means you lose a lot less And then you've got all these other opportunities to win, which you do the vast majority of the time. So one of the ways to trade, when I first started off trading many, many years ago, the thing that I'd think about most was how much money could I make? You know, how much money can I make? And that was my big motivator. And it was just so exciting to be out there. And then I started losing, and it was really disheartening. You know, we all think we're pretty smart. We all think we're pretty clever. And then you lose and lose and lose. And you go, gosh, you know, maybe I'm not so clever after all. And so I started thinking, is there something more important that I should be focusing on? And what I started thinking about was probabilities. What is my probability of winning? So in all of these trades, we set up a mathematical probability of winning of 80% or better. And when that happens, you just tend to win the majority of the time. And the times that you don't, the times that you get a surprise and it goes against you, we have a way of very much limiting our losses. So it just turned out to be a really good bread and butter way to make money consistently. You know, we've got on just any stock that's traded a lot in the options world, they have weekly expirations on now. But things like the S&P 500, they've got expirations on Monday, Wednesday, and Friday. So you can be putting these things all the time, set up your automatic orders so that you're protected. And then you just have this money hitting your account constantly as these things expire. I also like it because you don't have to do anything for expiration. It's a procrastinator's dream. You fall asleep at the wheel, you already have an automatic stop on it, the thing if it goes against you. And if it just goes in your direction, like it does about 80% of the time, that money just takes up permanent residence in your account and you've won on the trade, and you've got others that are cooking along as well. So if you've ever dreamed of sort of creating a cash machine in the markets, this is a great way to do it. And this works actually in bear markets and bull markets extremely well. It might work a little bit better in bear markets because the implied volatility is so high. And it's that implied volatility, that time value that we're selling. And so it really allows you to collect a lot. So like I say, credit spreads are bread and butter. They work so well. And it's just a really, if you're not doing them now, you can do really, really well. You'd be surprised at how much money you can make cumulatively when most of your trades just automatically work out without you having to be so good, so quick on your mouse. So our second strategy to beat a bear market that I think is better than what most people do out there is something that we call the greatest option strategy on earth. Now, this is the option strategy that got me retired for the first time back in the late 90s. And what this strategy, I don't do it all the time, but what this strategy requires is a pretty strong trend. So, you know, when the market was so darn bullish over the last few years, we use this one a lot. It works incredibly well. Now that we've got a really well-established downtrend, it works pretty darn good as well. So in the case of a bear market, you buy a longer dated put option, let's say, and most of the time we do those in the money, so they kind of act like a stock. We use about a 70 delta. So it appreciates rapidly as the stock heads lower. Then when there's a big spike down, and we need that big spike to really juice that volatility to make those options really expensive. When you get a big spike down, you sell the shorter term out of the money put option against it to collect some instant cash. And the idea is that the sold put won't be touched. I mean, we're trying to sell the strike that's just out of the reach of what we think that this stock or this index is going to do. And the idea is that their sold put won't be touched by expiration. And so that just expires worthless. We keep all that premium. And now we still have our long dated options so that we can turn around and do it again. So one of my favorite stocks to short right now is Tesla. And I know Tesla's a big darling. You know, everybody thinks it's going to be worth, you know, the whole rest of the stock market combined. And just to be clear, I love their cars. Teslas are super, super cool. I get a huge kick out of Elon Musk. I mean, the guy is brilliant. He's nothing if not entertaining. He's done some amazing things. Nothing against Elon, but the goddamn stock is overpriced. I mean, there's just a handful. There's maybe 5-6 stocks out there that are worth over $1 trillion in market capitalization. All the rest of them are software companies with these enormous, you know, 80% margins or whatever it is they have. I mean, super elastic, super scalable. You know, they deserve $1 trillion valuations. Tesla is a manufacturing company. think of them as a fancy Ford or a General Motors. They don't deserve to be $1 trillion company. They don't deserve a market cap that is the equivalent of most of the rest of the automobile sector combined. You know, I mean, it's not like they're the only ones in the world that have a license to produce an electric car. You know, electric pickup trucks are the most popular body style in the United States. Ford's manufacturing an electric F-150 right now. Rivian's been manufacturing their pickup truck for quite a while now. Tesla's isn't even on the horizon. You know, I don't know, without going into all the details, it's just a good short right now. So just to tell you about the strategy is, say you buy a 5-month put option here, you know, once you have some confirmation that you've got a pretty good drop. When you get another big drop and this thing kind of gets juiced, the implied volatility gets juiced, you drop down here and sell an equal number of puts to your long put. So if you bought one of these, and with Tesla, probably all you're going to buy is one because they're so darn expensive, then you sell a put against that. And then when this expires, and you're hoping that it does expire, you know, goes back up again, and boom, you know, you get another huge downdraft here. The put options get outrageously expensive, and you sell another one. You know, that big downdraft gets digested, the market goes sideways here, and this one expires, and then you wait for another big downdraft and you do it again. So a lot of people ask, well, gosh, you know, you're kind of hoping that your sold put isn't going to get overrun. You know, what happens if it does? Well, your strike is way up here somewhere. You know, you bought a strike at, I don't know, you know, 1,000, 950, 900, somewhere in there. So if you get stopped out down here at 650, you know, you're going to collect the difference between whatever your bought strike is and whatever strike you sold. It's going to be a happy day. I mean, you're going to make hundreds of % of return. But the game that we're playing is just collecting and collecting and collecting until we either see you know, a reversal that really concerns us, or we get stopped out. You know, here's kind of a close-up. You know, this would be when the stock is 950, you buy a 900 put. Now, this is a little bit out of the money because Tesla's so expensive. Most of the time I try and buy in the money so we can get that really good 70 delta is what we're shooting for. Every time the stock spikes lower, you sell a 2-week put below the stock price with the expectation it'll expire worthless. Let's say you take in just $10. Say this thing costs you 100 and you take in $10 every time you sell. Well, when you take in your initial $10, you're getting 10%, right? $10 on 100. Well, every time you take in $10, you're reducing your cost basis. So the first $10 you take in, now your cost basis is down to 90. You do that again, you take in another $10. Now your cost basis is down to 80. You're making bigger and bigger short-term returns because your cost basis keeps going down lower and lower. You know, when I first did this back in the 90s, they didn't have weekly options. All they had was monthly options. So in some cases, I'd buy a year or 2 years at a time. And if I got really good at selling and I didn't get overrun, I could take in enough of this premium to completely wipe out my cost basis, the original amount of money that I paid for these puts, or in the case of a bull market, calls. And then I was still collecting money with no cost basis. And I'm sitting here trying to calculate my return. I go, well, my goodness, you know, my cost basis is 0 and I'm still bringing in money. It's, you know, it's like infinite returns, you know, it's just amazing how well this can work. And like I say, if you zig instead of zag and you get overrun, it overruns the put or the call that you sold, you still collect a huge amount of money. Plus you're following this down with a stop, right? Your long dated put, you're following down with a stop. And so if you do get this big reversal, or all of a sudden the market decides to truly go bullish and not just a tiny little correction like we saw here, if it really just takes off to the upside, you get stopped out, you're out of the trade. If you've been in it any length of time, if you've had 1 or 2 chances to sell against it, you're going to be profitable even if you get stopped out. So this is one of my favorite strategies for the trending market. Fortunately, most of the time the market is trending. That's why I call it the greatest option strategy on earth. The advantages, now this is cool. So this is just something to think about, some of the advantages with this strategy. The put that you're buying is long-term. So the longer amount of time you buy, the cheaper each unit of time gets. So if we think of a unit of time as a week, all of a sudden your weeks are really, really cheap, what you're paying for them. Essentially, you're buying wholesale. Then you turn around and you sell puts that are relatively short term. So their unit of time, a week there, is going to be more expensive relatively. So you're selling retail. So and so you're buying your time cheap, you're selling your time expensive. I mean, that's an age-old business formula for making money. If your put is overrun, you still make money. Every sold put reduces your risk and increases your profit potential. And most of the time you get stopped out one way or another, which is fine because you're making money. You set yourself up to do it again. But if you do make it all the way into the end of your 5 months or 6 months or 3 months or whatever it is you bought, and you haven't been called out yet, you usually have just an outrageous profit to show for it, because you've not only got the huge difference between your original strike and whatever the stock is going for at the end of that long option, but you also got all those little profits in between, and they all add together to just create this huge return. And not only that, I mean, if you guys like trading and if you like kind of outfoxing the market, this is fun. This is a fun strategy. It's a lot more fun when you've removed your risk, and at a certain point, there's just really, with your stop and everything, there's just no way that you can lose on this thing. So now I'm going to tell you about a way to take advantage of a bear market that is not strictly trading. Now, I know we have a lot of traders on this call. And as traders, we like to get in there. We like to buy and sell. We like to look at technical indicators. You know, in some cases, I think we just can't make it too complicated. You get so many lines on your charts that, you know, one of them is bound to hit something, right? And it's just crazy how into it people get and how into it I've gotten in the past. I discovered something here that is so darn simple, but it's made me so much money. It's like made me more money in 1 year. This is last year, and it's going to do it again this year. Made me more money last year than my last probably 20 years combined of being successful in business and being a successful trader. I can't overemphasize how cool this is. Now, when I first got into microcaps, you know, that's tiny little stocks that don't cost very much money. Since I'm an options trader, I call them options that never expire. So if your timing isn't right, if you think this thing's going to take off in the next month and somehow or another it doesn't take off for the next year, that's okay. You just hang on to it. Nothing bad happens. You just keep holding it. So these are tiny little stocks with huge potential. And that's what I'm talking about. Now, in terms of a bear market and how they relate to a bear market, I've been doing some studies on these things. It's pretty darn fascinating. So between 1999 and 2014, we had a bunch of stuff happen in there. We had the tech crash. We had, we had the housing crash in 2008. We had all, you know, there was a lot of turbulence back then. Well, here's what's interesting. The Russell 2000 smallest cap stocks out of the Russell 3000 outperformed the S&P 500 by 114%. So there's all these different time periods, and typically they correspond to turbulent times, oftentimes bear markets, where the micro caps and the small caps outperform the big caps. And there's some really good reasons for that. It's a lot easier to double, triple, quadruple a stock at the very beginning of their life, where the cap is small on the stock, and they can double those earnings, they can triple their earnings, they can quadruple their earnings. That's a lot tougher for an Amazon, you know, that's already gigantic, or a Microsoft. You know, when those stocks go up 20% in a year, everybody's jumping up and down. My micro caps go up and down 20% in a day, typically. And as an options trader, I love that. You know, if you're coming from a super, super conservative standpoint, you look at micro caps, you go, oh my gosh, you know, too risky. You can make so much money with these things, it will blow your mind. And I'm not talking about trading. I'm talking about buying and holding. I realize buy and hold are like dirty words for a lot of traders, and they used to be for me. And now, I mean, I am a believer. I'm going to show you some profits. So the problem with microcaps, as you might know, is there's a whole lot of bad ones out there. Probably 95% of them are not even worth taking a look at. You can lose a lot of money in microcaps. There's scams, there's dishonest management. I mean, you're really going through the jungle with those things. And I had some bad experiences when I first started trading them. And I said, I need to figure out a way, because I know there's gold in there. I know there's some huge potential. I got to figure out how to pick the winners. So I created a series of filters to separate the few winners from the majority of losers. And like I said, I paid my tuition. I paid my dues. I lost so much money in the beginning, but I figured out some stuff that is making us all a lot of money. So my 5 critical filters, my 5 keys, I'm going to show them to you right now. The first one, the first part of this treasure hunt is that the company must be addressing a huge and growing market, and yet has little or no falling, so we'll have little competition buying shares at low prices. These stocks can usually be found on the OTC markets, that's the over-the-counter. Usually they're not on the NASDAQ yet, they're not on the New York Stock Exchange, they're just struggling little over-the-counter stocks. They don't get any coverage, there's no big institutions following them, nobody knows about them. And I get in there and I do the research and I find out what they've got going on. And the first thing that I look at is their market huge, gigantic? So like in some cases, if one of these companies got 1% of their market, they could make us multi-millionaires. I mean, you want a big market, right? So number 2 is the company must own a strong technological advantage protected by patents or trade secrets. I want these guys to have a moat. I want them to have a better mousetrap. I mean, that's like so good, they cannot be denied. One of the words that you hear a lot in recent years is a disruptor. I mean, somebody that takes an existing industry and just turns it on its ear, where number 1, nobody can deny that they've got a better way to do it. And so everybody just flocks over to it. And a lot of the time they combine a way better method or a way better approach with a lower price. And they just make it so efficient and they just make it a no-brainer. And it's like everybody just switches. And we've seen that so often in the last 20 years where technology has just made something that we've been using forever completely obsolete. And all of a sudden, everybody's got a smartphone when they used to have a phone attached to the wall. I mean, it's just so obvious. Just everybody makes the switch. That's the kind of companies that I'm looking for. And number 3, the business plan must enjoy fat gross margins with the ability to rapidly scale. Now, there's different types of companies that can do that, but what I want you to think of is like software. Like once Microsoft creates the software, doesn't matter if they sell to 1 person or 1 million people, it doesn't really cost them any more money. That is the ability to scale, and it makes these companies just unreal amounts of money. I mean, I don't know if you guys read, quarterly reports and that kind of thing, but, some of these tech companies are literally taking in billions and billions of dollars every quarter. This is the business model that allows them to do that. So if you want to get rich, you find the company that isn't there yet, but is heading there at a rapid pace. And number 4, management must have had previous public company experience. It's really, really important. And preferably a history of taking other companies to liquidity events at lucrative valuations. In other words, an IPO or where they got involved in some company that made their shareholders very, very wealthy. And when I'm looking at management, one of the things I look at is not just that they're competent, that they know what they're doing, but I want management that takes good care of their shareholders. So I've been involved with management before that doesn't care so much about dilution, right? So the company starts off with like 20 million shares, and all of a sudden they end up with 1 billion shares. And what you have, the shares that you bought, just aren't worth anything anymore. That's probably the most common pitfall with microcaps, is they need to get funding from somewhere. They get convertible debt funding, they get toxic funding. And before you know it, you have just billions of shares. Your position isn't worth anything. So when I find a CFO of a company that is super stingy with those shares and they just don't want to let a single share go, I go, yeah, that's my guy right there. Because any shares that I have, that guy is going to protect my shares. He's not going to let them get diluted. And number 5, this is super, super important. I must develop a personal relationship with management and preferably even become a consultant for them, so I can call the CEO or any other executive anytime to get answers when we need them. I'll be honest with you, I've got a pretty nice portfolio of these stocks right now. I don't have a single one where I can't call the CEO anytime, even on the weekend, and they pick up the phone and they say, hey, Peter, how are you? And I'll say, hey, listen, I just saw where you guys had so many more shares come on the market. What the hell's going on? And, you know, they'll tell me, oh, well, that was because of this and that, and that was this financing. And I don't want to go on just public information. I want to be able to look somebody in the eye, see if they're telling me the truth, and ask them questions about their company. And of course, we don't trade on insider information. That's illegal. But a CEO can talk about the competition. They can talk about the market. They can talk about a lot of things. They can talk about anything that's already in a public release. They can give me a little more color on it. There's a lot of information you can get when you know management personally. So those are my filters. And right now, and in the past couple of years here, they've just worked beautiful. I'm going to give you just some examples, and I tell you why a bear market is actually the best time to invest in these things. So we've already talked about it, because you might be thinking, okay, well, isn't this bullish? Aren't we buying, hoping it to go up? Yeah, we are, but we're going to get some incredible prices. You know, the biggest problem with these things is their fundamentals change so quickly that they'll take off on you. So this is the one we got back into in 2018 for $1 a share. I bought a whole bunch of this thing. As you can see in, when is this? This is right towards the end of 20, beginning of 21. The stock got up to $25 a share, got a little bit more than $25 a share. That's 25 times on our money. So, oh yeah, I know it's impossible to get right at the peak, but as you can see, we have a whole bunch of $15 a share here. That's 15 times on your money. If you want to put a percent on that, that's 1,500%. And everybody loves to trade options because you're going to get this great return. If you get a double on options or a triple, you're doing fantastic. This is 15 times on your money. This kind of an increase will make you rich. Even down here, even as it faded to way down, here you still got 3 times on your money. You know, you still have a fantastic return. And this isn't isolated. Here's one you got back into 2018 at 25 cents per share. Right here, we've got a 19 times on our money. You know, you had another chance to do it here. All in here, we've got, you know, at 25 cents, we've got 12 times on our money here. You know, you don't have to get out at the absolute tippy top. And I also teach people, you know, I'm putting together a whole microcap manifesto that teaches you exactly how to trade these things. And I let people know, man, when you see a spike, you don't have to get rid of all of your shares, but get rid of a few. Get your cost basis back, make a few bucks, put a smile on your face, and keep the rest for what's coming if we still think it's viable. Even way down here at the bottom, you're still getting 6 times on your money from what we originally invested at. I don't know where else you can do this. You could have done it on Microsoft. You could have done it on Amazon. You could have done it on Apple if you would have gotten back in the mid 90s, or, you know, whenever they were micro caps. So that's what I'm looking for. And here's the good news. We don't need an Apple. We don't need a Microsoft. We don't need to go something to go up thousands and thousands of percent. But if something goes up 10 times, it's going to do incredible things to your brokerage account. You take that money, you reinvest it in a couple others. The next one goes up 10 times or 20 times or 19 times, whatever it is. And all of a sudden, you're richer than you've ever been before in your life. And I mean, I'm creating huge tax problems for people is what we're doing. Okay. So this one, this is one we got into, heck, at 13 cents per share. Actually got down to 3 cents per share, and I really pounded the table on it. But beginning of 2021, it got up to $4.90. You know, 31 times on your money. Even way down here, way down at the bottom. This is recently. This is in the throes of the bear market, and we've got 8 times on your money. So these are incredible money makers. And this is while the big caps, the S&P 500, all of these things are crashing. These microcaps are in their own little world. When they're really increasing earnings, when their prospects are so incredible, money seems to find its way into these stocks. It's just kind of amazing. So, you know, those are stocks that have taken off, and they've done really well for us. But we've got several that are just starting to in a big way. There's one right now. If you got into one stock right now, I'm just going to talk about it. This thing can make anybody here listening a millionaire. I'm absolutely convinced. And this is this one right here. This is my #1 pick right now. And the reason it is this goddarn thing is 15 cents a share. And it's more, that's not like on 1 billion shares. That's like on 130 million shares. This thing has a micro cap of like $20 million. I mean, they consider micro caps like anything under 300 million. And this isn't even a micro cap. It's like a nano cap. I mean, it's tiny. It's got a $20 million valuation. And the company is netting. They're netting 12 million a year. And that's at their last earnings announcement. At the next earnings announcement that's coming out on April 15th, they are going to blow people away. They're going to be making more money per year than their market cap. I mean, this has to be the best deal on the planet. This one right here, I'm gonna put together a marketing program for this, just this one stock, to get people to sign up for our service. And I'm going to guarantee people, this is what I'm thinking, is 10 times on their money over the next 18 months minimum, or I refund your subscription. I mean, I have so much confidence in this thing. I bought. So this is yesterday, the S&P 500 went down 117 points. This thing went up. Very few stocks did that. They filed another 8K. They have so much revenue coming in, and it just builds and builds and builds. And you talk about a recession-proof business. This is they're selling health insurance for 30% less than you can get it anywhere, and they've got an incredible mechanism to do that. They're just, everybody wants what they have. Nobody's going to get rid of their health insurance, whether there's a recession or not. It's not a discretionary item. In most cases, this is paid for by the employer. This is a heck of a company. I'm so glad I found it. Love the CEO. I can call this guy anytime I want. He's young, he's energetic, he's ambitious, and he's a good man. And that's why I love knowing management personally. This one right here is my second favorite pick right now. These guys are going to have such a monopoly. This is Unified Communications for First Responders, 14 cents a share. Absolutely getting a ton of attention. Just starting off, this is just in the beginning, but I didn't realize this, but the fire departments, the police departments, the rescue people, they all have a really, really hard time communicating with each other because each department buys their radios from different suppliers. Sometimes they'll use different frequencies. They have a really, a tornado comes into Oklahoma, you have all these different agencies, from the federal government, FEMA, to the local police force, to the state patrol. Everybody's trying to communicate with each other, and they're having a hard time doing it. These guys have put together a platform where everybody communicates absolutely seamlessly. It's all software, so their margins are huge. Homeland Security wants to adapt it all the way down to the police forces around the country. Everybody wants this. And once they have it, in order to communicate with the other one's going to have it. It's going to end up being a monopoly all over the United States. And I think that's going to be happening in the next year. And in this 117-point drop, this thing didn't miss a tick. It just traded sideways. And that was yesterday. We have a battery metals recycling and clean production company, clean extraction from primary source metals. Right now, it's 84 cents a share. It's going to be the lowest cost battery metals producer in the United States. I don't know if you guys follow the price of lithium, but it went up about 500% just in the last year. I've talked to the CEO of this company. In fact, he did a presentation for a group just a little while ago, like about a month ago. And what he estimates, according to their studies, is lithium isn't just going to keep going up. It's going to get to a point where these EV makers are going to be needing to get their hands on battery metals And like with lithium, they won't be able to, there's going to come a time when they won't be able to get it at any price. And the reason is new battery manufacturing facilities are coming on board very, very quickly. New EV manufacturers are coming out really, really quickly. All the EV makers are really wanting to ramp up production. And yet the sources of new battery metals are very, very slow. It takes 10 years to get a mine through the permitting process. We're not wanting to do business with Russia and China as much anymore. That's where a lot of this stuff comes from. There's like one lithium producing mine in the entire United States right now, Albemarle, and they don't produce that much. I mean, this is another no-brainer. I mean, this thing is going through the roof, and it dropped a whopping yesterday at what, while the S&P 500 is down 117 points, this one dropped 3 cents. That's it. And then this one, so that's number 3. And then number 4 is this is a device that you wear on your wrist. It's a wrist-worn, it's a platform that can identify blood composition non-invasively. So let me give you an example. First market they're going after is glucose. Right now, the only way to continuously monitor glucose for diabetics and so forth is Dexcom's device and Freestyle Libre and a couple others. They stick a needle in you that stays in there for like 10 days. And it is continuous, but you have a needle inside your body. You got to shower with this thing on. I mean, it is really nasty. And this company right here has a solution, and they've got over 30 patents on this thing. Nobody can come in and encroach on what they're doing. Glucose is going to be the first one, but it'll be able to identify any drug in your system. Somebody comes in with an overdose, you got to treat them, but they're unconscious. What do? You wrap this thing around your wrist. It tells you what exactly it is they took and what the concentration is. This is an incredible platform. It's a multi-billion-dollar platform. Right now, I don't have the price down here, but I believe as of yesterday, the stock was $1.54. Once again, not that many shares outstanding, so a nice low valuation. This one's going to, I think, make us millions of dollars. Once again, this stock was up yesterday when the S&P 500 was down. These are fantastic stocks to get into in a bear market because you might be able to get a little bit better price. And as soon as they start getting traction, I mean, these things go through the roof like you just saw. So do all 3 strategies for the biggest potential gains. And I put together a package where you can take advantage of all 3. I'm going to give you a really nice discount. But one way to look at these are time frames, right? So credit spreads are, I'm going to say credit spreads are 2 weeks, 2 weeks of time. It's real, and you can overlap them. So you got money coming in every week. I mean, this is my favorite bread and butter way to just cash flow the markets. This is the greatest option strategy on earth. I'm going to say, let's just call it 4 months. You can vary that, make a much bigger amount of money, but it's like 4 months. And then these guys can make you an unbelievable fortune, these micro caps. And you're going to hang on to them for, I'm going to say 2 to 4 years. And it's going to be a very, very exciting 2 to 4 years to watch. And I know we're all traders here. I know that's probably what you mainly do. Maybe you don't buy stocks. These are stocks you should buy. So to make sure you start off profitably and stay that way, I put together an educational package. It's the best anywhere. Just the credit spread package alone, I used to sell for $2,500. Still get emails from the people that bought it. They absolutely love it. They've been cash flowing the market ever since. There's a lot to it. It's the winning secret. It includes, if you're not familiar with credit spreads, how to trade credit spreads for fun and profit, step by step, why they work so well, how you can make them work for you. You get a 161-page downloadable ebook, 10-chapter video series, archive webinars, all the new additions for life. This is great. Plus, you get videos that show you how to set up automatic orders. This is what I really like. It's not just about making money, it's about lifestyle. So we set up automatic orders where we can walk away from our trades. And the thing that we want to happen, whether if it goes against us and we limit our loss, or it goes in our direction, we make a profit. You just don't have to watch it. You don't have to be Johnny on the spot on your computer doing the exact perfect thing at the perfect time. You can be out working or playing or enjoying your life. And I like that. This is our subscription service. You get 2 high probability trades every week. I'll show you where to sell your spreads and how to sell them for maximum gains with minimum risk. You'll get an extra bonus. I'm going to throw in a 10 module video course specifically on trading the weeklies. That's the best thing that's happened to the options market literally since they were invented. Weeklies are fantastic. And you'll get a 10 module video course. Just completed this one a little while ago. I think you're really going to like it. This is the greatest option strategy on earth. That's where we buy a long-term option, we sell against it. And this is the one, if you don't get anything else, I hope you get this whole package. But if you decide to pass, I sure as heck you come to the website and just buy the microcap investor membership. This is it's the cheapest thing we sell. It's $297 a year. It's made my subscribers millionaires. It's made me a millionaire. There's no guarantees, of course. This is trading. This is high risk, high reward trading, but I feel really good about the future here. So you'll get the subscription. I'm putting together a microcap manifesto. You're going to get a pre-production price on that. That's not out yet, but I'm going to throw that in as well. That's how to trade these things, how to get into them, how to scale, the things to look out for. I give you a lot more elaboration on my filters, so you can do this on your own if you want to. But this is one everybody listening should absolutely get if you want to do some incredible things for your financial future. We don't have a lot. I don't come out with a new company every week. Right now, we've just got 4. I'm working on a 5th one right now that will blow your mind once you hear about it. But I want to be concentrated. I want to have money in the ones that are really going to go up the most and the fastest. I'm super selective. I get exposed to all kinds of opportunities nowadays that people know that I'm in this. I get calls every week about things that little companies they want me to invest in. Super selective. I'm like a rejection machine. I take 1 out of 100. So in addition to the best way to learn is one-on-one instruction, I've got a beautiful gal in the office here, Deanna. She's going to be on the phone with you. She's going to show you around the website how to take advantage of everything. Make sure you get your account set up the right way, get the right options clearances. There's a few little complex ins and outs. I want you to have individual attention. This is something that you schedule with her. It's about a half an hour phone call. Really get you started out right. And I think you'll love her. This is huge. This is Alicia. Fortunately, I live in a university town, and she was a finance major. Wild gal, but I'll tell you, few people I met that are smarter than her. We sit down and we go over option strategies. She's our private personal coach. Her coaching goes for a lot of money, but she makes people a lot of money. And I'm going to throw in a session with her for free with this package, 45-minute personal coaching session. If you're an options trader, if you like to trade, Alicia's made people a lot of money by keeping them from losing money and showing them ways to make a lot. And we get people that buy 8-session coaching packages, and they get them back to back and back and back. And I had one lady that bought, I think, 5 of them. She bought them one right as soon as her eight sessions were over. She'd buy another 8-session coaching package. Was she a slow learner? Did she have a hard time figuring out what a call and put was? No, she knew the strategies forward and backwards after a short amount of time. But her and Alicia would put their heads together and they would find trades, and Alicia made this gal a fortune. So I love her. She's right here in the office. She's like my right-hand gal, and I think you're going to love her too. So you're going to get a coaching session with her included. To find this whole package, this is something we've never done. We never combined everything together before. You have a lot of things going on here. You have options trading and you have these micro caps. But I put together we sell the education separately. You can pay for that on its own. We sell the subscriptions separately. You can pay for that on its own. But I put it all together in a package that I think you're going to find hard to resist, especially with the amount that we're making. So go to worryfreeprofits.com. I've got it all laid out there. I've got a great price for it. I think it's $597 for everything. Big discount. You can make that back on one credit spread trade. I don't want you to pay for this. I want the market to pay for it. And if the education is good, it should. The thing that I'm most excited about, I've been trading options for 25 years. I've gotten good at it. Options have been very good to me. I've never made money like I've made on these micro caps, never in my life. And I'll let you assess that on your own. You can read about them, but these are stocks that can potentially, the minimum we're shooting for is 10 times on our money. Some of these are going to go to 100 times. We've already had one go to 150 times on our money. And that makes big changes in your brokerage account really fast. So that's the end of my formal presentation. Fortunately, we have a few minutes left. I'd like to answer any questions you have, so fire away.
Peter, thank you very much. I'll wait for a couple of questions to come up here, but I have a couple that I wanted to comment on. One thing I loved about your 3 steps here is the one, you and I are probably cut from the same cloth. The probabilities, I think, are more important to take a look at, especially on the credit spreads. So many people get hung up on putting on a strategy and having that risk reward ratio of maybe risk 1 to make 2 or risk 1 to make 3, whereas credit spreads really turn that paradigm around where you're looking at the probabilities. And that's one thing that I loved about what you were talking about, is beating the probabilities. And that's really what it's about. It's not always about just trying to get your risk reward right. Your risk reward comes into line when you're playing probabilities. Am I right? I mean, that's the way I look at it.
Well, you're exactly right. What I found, I've talked to enough options traders, and we've had enough live events and talking to people. The people that stick around in options do exactly what you said. They pay huge attention to the probabilities. That's how you get an options trader that's been in the game for 10 years or 15 years. And the guys that are just swinging for the fences, unfortunately, they blow up their accounts. And I can speak, from firsthand experience. When I first started out, I think I blew my account up like 3 times, and you just get tired of losing money.
Buying options is like what you said was brilliant with the high volatility, especially right now, folks out there trying to buy calls or even buying puts to take advantage of this downside. It's a very difficult row to hoe because you are buying such high volatility. And even if you get that directionality right, we used to call it volatility crush, when it would just fall off a cliff and you're literally just watching the money just downtick and you're just, why is this not working out?
That's exactly right.
That's the paradigm that most people miss, I think, when they start trading options, get frustrated and then kind of walk away from them. And following you and some of your guidelines there, I think people will have much better success. And going back to number 2, we used to call those like the poor man's covered call or the poor man's covered put, because they acted like shorting a stock on the poor man's covered put, but you didn't have all those headwinds of putting up the money to borrow the stock or paying dividends, and that goes along with shorting and the risk involved in shorting a stock, right? I mean, this strategy number 2 with your limited risk, it's almost like you got a synthetic stop in there when you're buying that 70 plus delta option, right?
Well, you just hit the nail right on the head. That's exactly what we're going for, is a synthetic stock. So instead of paying, $1,000 a share for Tesla, you're paying $100 for the option, and that might seem like a lot of money, but boy, you get it back pretty quick when you start selling against it, and it's a fraction of what the stock actually costs. So, and if that's too much, take a 0 off of it. If you got $100 stock, you're maybe paying $10 for your synthetic stock. And you can sell against it just as easily and just as effectively as if you own the stock itself.
Totally agree. And much easier for shorting right now. A lot of people wonder, what do I do in these bearish markets? And one of the things that I think that you conveyed there is like, this is an opportunity we shouldn't pass up. I mean, I think you even mentioned you make some of the best money in bearish markets. And I feel the same way. When there's panic in the markets, that's the time to step in. Really, as scary as it might seem, that's when you'll get accustomed to these moves and making some money there. And
a lot of
finally,
opportunity right now.
Exactly. And what I love about the micro cap is really kind of diversification, right? I mean, not to quote that guy on CBC, but the mad money aspect of your portfolio, where you should allocate 5% of that portfolio to things like this that you are expecting to make those big moves, but you could lose some money in it. The brilliant thing about that is folks, you got Peter here that's doing the heavy lifting for you on actually finding the right stocks for this type of environment. I mean, I know I don't have the time. I'm sure you folks don't have the time, but Peter is doing that heavy lift for you. So I think you guys should really take a look at that, because he's right. If you have a little bit of money in an account, you can really build that on a multiple. If they just catch wind somewhere else, or even start getting talked about on some of these mainstream media platforms and things like that, right?
Yeah, and I just want to say, like, most people do research on their computer, and of course I'll look at fundamentals and all that, but like this last one that we just got into, we have an accredited investor group, and I was looking for something really incredible. Well, it's a company I followed for 3 years, and they're down in Tempe, Arizona. I live up in Oregon, and I flew down there 4 different occasions. I visited their lab. I talked about what they were doing. I got to know management before I ever recommended them. So this is something that I actually did boots on the ground research at their facility for 3 years before I ever recommended it. So I'm really careful, because all I have is my reputation, and it doesn't take too many losers before people don't want to listen to you anymore. But it's pretty darn gratifying when you make people money. So we had a live event about a month ago, and one of our subscribers, he kept screaming in my face, "You made me millions of dollars. You made me millions of dollars."
That is awesome.
That's kind of gratifying to hear.
I would have to say so. That's brilliant. I appreciate you taking the time here today, Peter. Great insight. I loved what you had to say. And I think that folks really had some eye-opening experiences today with your talk here through this.
I hope so. And thank you for having me. I appreciate it.
I really appreciate you too. Thank you very much. All right, we're going to start switching over to our next presenter here. I want to have everybody thank Peter. Take advantage of this. Worryfreeprofits.com sounds like an amazing product. I think everybody will have an ability to make up that money for sure. And that's what I always say. Knowledge is power, right?
That's right.
All right. Thank you, Peter. You take care. All right, folks, I'm going to try and figure out how to share our next screen here. Stop sharing there. I got to, let's see here. There we go. All right, our next presenter is going to be Reddy. She has 20 plus years as a veteran Wall Street analyst, known for her uncanny predictions in these massive moves that we've been seeing here and in the past. Her ability to make trading simple is amazing. So please, when you guys are listening, put your thinking caps on, because her mission is empower you as a trader to take control of your financial future so that you can live a life that you and your family deserve. All right, I'm going to switch this over to Hima. Give me a second to find her in here, and we will start getting her going here. Maybe take a second.
I'm here. Can you hear me?
I can hear you. Thank
Perfect.
you.
Okay.
Awesome.
I also turned my camera on, but I'm not sure if I'm showing up anywhere yet.
Okay, give me a second here.
Yeah, take your time.
Keep talking because it makes it bring it up.
Okay.
There we go.
Sure. All right. Well, hello, everyone. I'm excited to dive in. And yeah, it's pronounced Hima, like the Himalayan mountains, just FYI. But is this Steve? I don't know if we've got to meet him yet. That's
This is Eric Wilkinson.
Oh, Eric, nice to meet you. All right.
Wolfman.
You're okay. Oh, Wolfman. Oh, yeah. I know you by your Wolfman name for sure. So great. Well, it's great to meet you. And yeah, I'll get started here once. I don't know. I mean, am I not supposed to be on camera, or am I supposed to be?
You are. Give me 1 second. I'm a rookie at this, so I
think if you make me there's like a co-host or something like that. That's usually what does it.
I have you as co-host permissions here.
Okay.
I may need to figure out how to stop sharing Peter's for some reason.
Well, if he was co-host, then I think you have to dethrone him, basically.
Okay. I think he might be gone.
Hi,
Oh,
Patricia from Tech Support. So what I did is Hima has,
Yes.
hello Hima, thank you for coming. You have the host now.
Okay, so I'm host now.
Your host now, but your camera is not showing.
Yeah, I don't know why. Oh, let me. Okay, that's interesting. Well, oh, let me share my screen first. And then,
Okay, great.
oh, I think
Thank
because
you
my
so much.
webcam was on, so my computer was fighting. So I was just like checking my hair and stuff. Okay, how about now?
Okay. Okay, thank you, Eric. Hi, Hima.
Hi, you
Welcome.
guys can
Thank you,
see me now?
Hima.
Yes,
Okay.
we can see you now. Thank
Oh,
you.
terrific. Okay, excellent. Because yeah, I use Zoom a lot, but I actually don't get on camera as much as you might think. So this is a little new for me, but I'm excited to do it. So let me make sure I can figure out where the chat and all that usual stuff is. Ah, there it is. Okay. Will I be able to see the chat if anybody in the room is typing to me? I should, right?
You should. Can you see the last person's comment at 9:55 there?
No, I don't see. The chat's empty for me. That's why I wanted to double check.
Oh, okay. I'll keep an eye on it if that helps. If I see, do you want me to ask the questions as they come about, or kind of hold off on those? till the end?
So if it's possible for me to see the chat, like I'm a total Zoom girl, I use it all the
Okay.
time. That would be awesome. But if not, that's fine. Then Eric, you could just like hold the questions and then I'll let you know when I'm ready to take them.
I mean, I can see the chat. I don't know how, you should be able to see those though, I believe.
Yeah, I know, and I don't know
So-
why I'm not. That's why
So do you have a PC or a Mac?
I have a PC.
Okay, so at the bottom, you have where you share your screen. On the left is the chat. When you click on the chat will
Yep.
open on the right-hand side.
Yep, I have the chat open, but like I'll show you here, my chat is empty. Like nothing's populating. So
Oh, okay. So let me, well, we have to kind of continue and then Eric will
Okay.
help us with the question. Thank you so much.
oh, now I see folks. Okay,
Okay,
see you
okay.
testing at least.
Meanwhile, okay, thank you.
Okay, well, I will just make the most of it here and dive in. So so yeah, Eric, I'll let you know when I'm ready for questions, and I'm just gonna kind of move us through. So I have about 40 minutes, right? Just checking my time here. Okay, you know, I'll just wait until the cane takes me off the stage. That's fine too. All right,
Sorry,
well-
you have about 55 minutes.
55 minutes. Oh, see, that is there's a big difference. I'd love to know that. Fantastic. Okay, guys. Well, welcome. Happy Saturday. I'm not sure where everyone's dialing in from. So if you type that in the chat, even if I catch up on it later, that would be great. But I'm really excited to be here today. So if you can hear me and see my screen, everybody else, just type a Y in the chat. That way, Eric and team know you're set. And hopefully I'll see your messages in a bit. Oh, okay. I'm starting to see some come through. Yay. Like I said, I use Zoom quite a lot. So I love knowing where everyone's dialing in from. Fantastic. So I'm in Austin, Texas, and it's quite steamy outside. Where are you guys dialing in from? Because I mean, that's the amazing thing about trading, right? You can do it from anywhere around the country, around the world, etc. So I love seeing where traders are finding opportunities, whether in the US markets, in their own markets, and more. All right, so awesome. I am seeing, oh, we have a neighbor here in McAllen, Texas. Okay, fantastic. So what we're here for, guys, is my unique take on momentum. I'm going to dive in with you. You're going to see me move through it and teach you how to use it. We'll look at it with live charts too, and I'll have something special to share with you in the presentation. We're going to kind of flow back and forth throughout. All right, awesome. So like I said, you're here to get a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough with trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Really, isn't every single one? All right, would you like me to share an easy pattern that allows me to predict trends and large moves for you? Would you like me to share an easy way to trade futures, stocks, options, and more? Okay, awesome. Now, how many of you want to get as much as possible out of our time together? I'd love you to type a Y in the chat here. Squeeze everything we can out of this 50 some odd minutes, because I want that for you too. Because for most of you here with me today, this is going to be a long-term relationship. Once I show you how simple it is, once I show you how easy it is to consistently extract money from the markets, you'll want to hang out with me for a lifetime. So let's dive in here. In a moment, you're about to discover how to make money with future stocks options, even if you stink at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. Remember, we plot price and time on our chart. And in a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. So would you like me to show you that? All right, terrific, because I promise that by the end of our time today, you'll know what you need to pick the best trade, when to enter, when to exit in only minutes a day. So would that be okay if I start to pull back the curtain for you? All right, awesome, because here's the problem. Many traders, they're making everything way too complicated, right? You're getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault. They make it complicated. So as you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Now, I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. We'll even head over to the live charts and I'll take your ticker requests as well. As you all know, trading involves risk. So it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation, right? Your results are up to you guys. I can't predict them. I'm not going to predict them. Anyone who says they can is actually lying to you because I don't know your account size. I don't know your risk reward. I can only show you what's working for myself and others, right? Your success is up to you. So who am I and why listen to me, right? Well, if you haven't been following me for a while, here's a very short introduction. So I'm Hima Reddy, and I'm originally from New York, the hotbed of the markets. Now, I started out learning about the markets at 16 years old from my dad, starting with futures trading. And he was a successful trader in the GAN style of trading, G-A-N-N. Anybody heard of GAN here? Type a Y in the chat. Okay, and my dad was really far ahead of his time. In fact, he got a chunk of Amazon stock right at the beginning. Now, I became a certified CMT working at Piper Jaffray before I went on my own to help traders like you directly. And over the past 20 years, between my professional analysis in Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. Now, I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders, just like you guys, and invest to appear and all these things you see down here, Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all that media alphabet, right? I'm also the author of the trading methods of WD-GAN. So how did I get here, right? That's quite a story. So is it okay if I take a couple minutes and I tell you my story? It'll go by like that. All right, so here we go. Now I'm a successful trader and educator, but it hasn't always been like this. You know, years ago, life seemed great, right? I was working for the man, working in the corporation, making good money, but I was getting up at 5 a.m., working for them all day, working late, burning out quickly. Is anyone else here like a corporate cog making someone else wealthy? I know, right? And, you know, I thought like, I have no life. Basically, I had no spirit to anything I was doing. My friends, family were all just kind of side tangential things. And I started becoming a ghost in my own life. And then it happened. My dad, who taught me about trading, he passed away very suddenly and the bottom just dropped out of my world. And it felt like everything was crashing in. I had to leave my job. I had to take care of financial and legal family matters. And then I kind of realized, you know, this might be my chance, my ray of light to get out of the corporate grind. And so I just grabbed it with both hands. So back when I was apprenticing with my dad, right? He and I looked at the E-mini S&P 500 futures together. That is the first market I learned off of, which is pretty wild because it is not a tame market. And I started making this little exercise, this little report called the Skinny on the Mini. And I started sharing it with my dad. And after a while, he was actually making money with my analysis. I started sharing with other traders too that we were meeting, going to events, going to conferences, and they were benefiting from it. So I realized I was onto something. But all of that extra side analysis and trading I did, it had to stop when I worked on Wall Street, right? Conflicts of interest, can't do that stuff. So when I left Wall Street, after my dad passed and came back to my own trading, all those traders who I'd helped with the Skinny on the Mini before, they started hounding me. They wanted my report back. And they also wanted to learn the concepts and techniques behind it. And I took that opportunity to kind of reclaim my life and just move forward with my tribe. So I sent out the call to those former subscribers, letting them know about what's going on with me. And they said, yes, they would love my report that ROI'd on average 7 times out of 10. They couldn't wait to leave the hard work to me again. And the result was that I had time to trade my dad's accounts now for my mom and my family. I had time to trade my accounts again, and I started maximizing those trading methods of WD-GAN that I had learned many years before. And I started teaching others the hard-earned secrets that I had learned from my late father. And in a moment, I'm going to be diving into those with you, because what I've discovered is that trading equals freedom, right? I mean, trading is a variety of freedoms: location freedom, live where you want, work freedom, work where you want, time freedom, have more of it with your family and friends. So if you're here to learn to boost your trading because you want some type of freedom, please type a Y for me in the chat. I mean, I should see every single person in the room typing Y in the chat for that. And the thing for me is, when I found the system, I got my time back, I got my family back, and that's freedom, right? Clearly, that's what we all want, is freedom. But clearly there are challenges. Many traders, they lose money because they don't have a proven system. And trading often feels complicated and overwhelming, and often it can be confusing, right? And that's because you don't have a simple proven system, because what I'm about to share wasn't available until now. And now that it is, you've got to get your winning RSI playbook that will dive you into my full approach to momentum, which we're going to start here today. And it'll show you how much easier it is to make money trading futures, stocks, options, and more. I'll show you that a little bit later. So what's different about the winning RSI playbook? The winning RSI playbook dives into my Jedi indicator and exact settings, along with market case studies, that helps you accurately predict turns and large moves in any market on any time frame. But again, more on that in a bit. First, we're going to dive right in here so I can train you, spending your afternoon here live today. So let's start with this, guys. Who here has traded with momentum before? Please type a Y in the chat. Any of those indicators on your platforms? All right, now, if you've never used momentum before, I want you to know it can be easy, okay? But first, you need to understand how it works. So a Formula One car racing track will actually have you understanding momentum in no time. And this has a soft spot in my heart, because I went to Indiana University, and the little 500, the Indy 500 stuff I kind of grew up around. All right, so let's go to the racetrack. Let's put ourselves in the driver's seat here. Are you guys seeing this racetrack on my chart? I really want everyone here to just type a Y in the chat, just so I know you're here and you're listening. All right, thank you, awesome. So if you're in this car, this little hot red vehicle, you're at the starting line of the track, you rev up your engine and you go, then on that first straight run, you're going to accelerate or speed up quickly, right? You're trying to win the race. Then when a turn comes, you're going to have to prepare accordingly. You're going to ease off the gas and slow down or decelerate, even if it's just a little bit, so you can have more control as that car whips to the other side of the turn. Now, after you make the turn and the road straightens out again, you're going to hit the accelerator once more. So with this simple racetrack here, guys, are you getting the idea of how you accelerate and decelerate on the track? All right, awesome, because now you know exactly how price momentum works. So let's take ourselves up into that little helicopter. Okay, we're going to be the pilot in the helicopter looking down at the racetrack. So that road, that racetrack, is now price on our charts, and momentum is plotted down below. So when price is trending higher, like the first part of this chart here, you've got upward momentum that's improving, feeding into it. But that upward momentum, it generally begins to slow down and peak before price does. That's what makes momentum indicators leading indicators. Not like a moving average, that's a lagging indicator. These are leading indicators. All right, awesome. Now, during falling prices, there's falling momentum that's becoming a more and more powerful force. And then when a price bottom forms, you can see momentum usually bottom first. Again, it kind of gives you that heads up on the hidden strength or weakness that's in the market. So guys, type a Y in the chat if this is making sense. This is like momentum one-on-one, whether you started trading yesterday or 10 years ago, this gives you that foundation of getting started with momentum. Okay, fantastic. So now we're going to dive into the indicator, but first let me share with you some results from our trading family. Hima, I value your insights. Your momentum indicator is an integral part of what I put together. I believe I'm ready to go from paper to live trading, said Jim. All right, now that we've made momentum easy to understand, okay, in a moment, I'm going to show you how you can make money trading momentum. But first, you guys want the Jedi secret, my twist on momentum? All right, well, you're here and you're engaging with me, so I know that you're ready for it. So I'm going to let you peek behind the scenes of my trading and show you how momentum moves through markets that you know using my special Jedi indicator. All right, so starting right now, I want you to think about the markets you trade. The ones you watch and monitor, the ones you actually put trades on, the ones you want to kind of graduate and move into, start collecting those tickers in your head. Because this indicator is called the RSI power zones, and you can use it on any market in any time frame. So take a look at this left-hand column here. Look at all these different types of markets, okay? You've got your indices, that's a SPY, the Dow, the Qs. You've got stocks, that could be Amazon, Tesla, Apple. ETFs, it could be those equity index ETFs or something like GLD or SLV. Maybe we have some commodities traders in here, directly trading futures. Maybe you're just watching interest rate world, right? Bonds, the 10-year, or maybe you trade currencies. So go ahead and let me know in the chat, what asset class do you trade? So we can know and see together that this indicator twist applies to any of those. Now, here are some time frames to the right. This is just a sampling. A time frame is how you plot the data on your chart, okay? So it's anything that is in seconds or more. So 5 minute is a pretty low time frame. Maybe you trade a 1 or 3 minute. I'd like a 3 minute on the E-mini S&P. 15 minute, 60 minute, you can go all the way up to monthly, even quarterly. All right, awesome. So we have Jansa here who trades stocks, SLV, fantastic. We have Amba who trades options on stocks and ETFs. And if I'm mispronouncing your name, please pardon me, but at least you know I can relate, okay? Because my name is not Jane Smith or whatever. Gabriel trading options, awesome. Great. So here's the thing, guys. I'm asking you this question and asking you to let me know what markets you trade, because I need you to understand this is going to apply not just in the world I watch, but anything you trade too. And I'm going to give you an opportunity here to give me your ticker and pull it up on a live chart. Okay, first, I want to get you this foundation and make sure you understand what we're looking at. All right, so let's look at how this works on a variety of markets and timeframes. We're going to have a little sort of glimpse into history that's going to then relate to what's going on right now. And then we're going to start bringing in your markets. So we're going to start with a very popular commodity on a monthly time frame. I mean, you're probably wondering, why would you plot monthly candlesticks? I'll show you why. And that market is oil, because whether you trade it or you just feel it at the gas tank, which is especially relevant right now, it's a very important market to watch. So I want you to look at the bottom left corner here, guys. Do you see this squiggly black line with these green and red lines? Looks like Christmas. Please type a Y in the chat. Okay, that's my RSI power zones indicator. She's got 4 zones, and I'm going to lay them out for you. The 2 lower red lines make up the bear support power zone. The 2 lower green lines make up the bull support power zone. The 2 upper red lines make the bear resistance power zone, and the 2 upper green lines make the bull resistance power zone. Now, as we use the indicator, you're going to see what these mean. And like I said, my playbook, which I'll talk more about later, dives into it deeper. So let's take a look at this piece of price history in oil and bring it up to current day and see how looking at the RSI power zones may have been useful. So does anybody else remember this run up in oil? And this was like 12 years ago, but it was a huge run up in price. It took oil to over $200 a barrel, which is quite hard to imagine, right? Now, that strong advance higher was accompanied by the RSI power zone shooting up, moving from the bull support power zone to the bull resistance zone. Now, guys, these levels of these zones, they are not on any standard indicator on any platform. And they are designed so that you can trade the strength in a strong market, in a bull market, and that you can be prepared to deal with the weakness in a falling market. Now, you can see right away that there was this massive drop, and that aligned with the RSI power zones shifting down to the bear support power zone. So when I was an analyst on Wall Street, I was on Wall Street analyzing all kinds of markets for traders at this time. And I said, you know what? This is not a good sign. This is a sign that the new high prices in oil are not going to come anytime soon. And man, it just turned into a nasty sideways range for years. Now, these are all tradable moves, but from a long-term monthly perspective, you can see this was just a mess, right? But look closely, guys. Every single one of these yellow highlights, look at how they coincided with a peak on the RSI power zones. Do you guys see that? Please type a Y in the chat. So basically, the bears were still dominating this whole story all these years. And so when everyone else on Wall Street was getting excited, like, oh, we're in a sideways range, we're going to break higher, get back above 150 a barrel, I was like, I don't think so. I think we might have more downside ahead. And that's exactly what happened. Okay, futures traded lower into multiple moves, and look how each one of these pushed lower into the bear support power zone. Guys, the biggest benefit of using the power zones versus the standard overbought, oversold in the RSI is that it keeps you with the trend and doesn't have you doing these amateur moves of like bottom picking and top picking. It keeps you short with your shorts until they start to turn, keeps you long with your longs until they start to top out. Now from here, was there a recovery? Yeah, but look at the recovery. It was kind of slow and steady, and it brought the RSI power zones on the monthly oil chart back to the bear resistance. So you might be wondering, well, what happened from here, right? This is all great, Hima. This is history. What about now? What about right now? Who wants to see where we are with the RSI power zones and oil right now? Please type Y in the chat. All right. Here we go. Grabbed today. This is the freshest chart you can see of the oil monthly chart. That gray vertical line matches where the last chart went off. So let's look, and I'm going to use fancy zoom drawing tools to really hone you guys in. From here, the fall that we had into 2020, look at where it stabilized, bear support power zone. The last time we were in the bear support power zone also ended up with recovery. Now, the recovery that started off of the 2020 low, okay, this can all be looked at more closely on a weekly, daily time frame, and we're going to do that here. But look at how this run up continued, and all we've been doing is making a way back to the bull resistance power zone, just clear slicing through all those RSI power zones. Do you guys think that having this knowledge of RSI power zones would have been helping you to stay on the right side of the trade and the right side of the trend these years? I mean, it's pretty evident to me having that monthly time frame as your big picture and then going narrow down, right? Okay, awesome. Love it. Now let's take this to another market you know and love. And then, like I said, we're going to definitely bring this to the live charts here. How about an ETF on a weekly time frame? The SPY. Okay, my baby is the E-mini S&P 500 futures, and here's the SPY. And again, we'll do a tiny bit of a history lesson to get a feel, and I'll show you what it's looking like today. So here's a reminder of all those zones laid out. Every candlestick representing 1 week of price action here. So you can see there was this multi-month consolidation. RSI started to, or the price action started to break above the black horizontal line, dashed line. And then when the pullback here on price occurred at the yellow highlight, where did the RSI power zone hold? Yeah, in the bull support power zone. That was a huge clue that this price breakout was actually going to sustain. And man, did it sustain. These were the good old days, right? And this is when we were just sort of sailing higher. And that whole advance saw the RSI power zones move from bull support to bull resistance. Are you guys seeing how even starting just with the move from one zone to another, you can have more insight to what the market's doing? All right, awesome. Now let's look at what happened right after this move. Whew, sharp, ugly fall. And I remember I was writing this skinny for traders. Everybody was getting a little freaked out. What was going to happen here? But what I saw here, guys, was simply the RSI power zones moving back to the bull support power zone. It was just a quick relief of overbought conditions. So my advice to folks was, hey, I think we're going to have a couple months of sideways action. So trade the short-term moves, not this is the end of the world. And that ended up being the right approach because we end up going sideways. But all of this resulted in tradable moves on the daily chart and the intraday charts. So this whole kind of return from one zone to another, guys, it's like a slinky, okay? I grew up with slinky as a toy, and this is this metal coil that you would like throw down the stairs or off the deck in the backyard, wherever. And when it was tight and coiled up, it just sat there and didn't do anything. And then the energy in it exploded. It was moving all on its own for a while. The market's the same way. It's like a slinky. The coil gets tight. You know, it's not sure what it wants to do. That energy builds up. And then when it moves, it really moves. So let's see how it moved out of that slinky. Started breaking out higher. And look at this, guys. Even in that sideways consolidation mess, we held the bull support power zone. Okay. So where is this now? This is great history, right? Where are we today? As of this week, Friday, June 10th, closing action. This gray vertical line represents where the last chart dropped off. Now, on the RSI power zones, on the weekly SPY chart, there's a lot of volatility you can see here. We traded, made a lower low, then we moved up, made a higher high, then a lower low, right? The pandemic set in. But look, even in the pandemic low, just kissed the bottom of the bear support power zone and started sailing higher. Now, the beauty of this along the way, let me really clue you in, is a few pieces here. After we made the pandemic low, keep your eye on the bull support power zone. It was touched and held here. And then the market got so strong, it didn't even come back to bull support. Guys, that's why it's not as simple as just trade between the green or trade between the red. There's more to it, which I'll get to later. But check this out. As we start to top out at the end of the year, 2021, look at the shift that's been occurring. Now the bull support power zone isn't shaping things anymore. And like I said, on the lower time frame charts, there were even more clues about the price action. So these two charts, the oil, the S&P, this is like me taking you out on a date with the RSI power zones. Are you interested in this second date? Would you like to go and meet the RSI power zones again and see how it works on your markets? Type a Y in the chat. Okay, awesome. Because we're going to do that here in just a moment. So we're going to dive into looking at the RSI power zones on your markets so you can get to taste them even further. But first, let me share with you more results from my trading family. Susie, my first month using RSI power zones was also my best trading month so far. All right, by now you guys are getting it. So I'm going to show you the RSI power zones in action right now on live charts. I'm going to bring them over on my screen. And to do that, what I'm going to kick off is just show you just a handful of setups I have made that I share with my trading family. So you can see what this looks like when you're part of my tribe, okay? So here's a couple more examples, and then we're going to head over to the live charts. Anybody trade stocks here? I think I saw that earlier. How about in a daily time frame? I would say that's pretty popular, right? So here's a call I made on Netflix that was simply starting off based on momentum and then amplified by layering in other tools and techniques I use. Does anybody else remember this run up in Netflix? It was a really awesome move. And it was from the 271.22 low to the 423.21 high, a 56% move higher. And all you needed was the RSI power zones and understanding of the setups, and anything else you know further about the charts would have just helped you amplify even more of that move. And I called this out as it was happening, guys. I didn't tell my tribe about this, here, 10 bucks away from the high. I told them about it here as it was forming. Here's another one on Twitter. This one we actually did in a monthly group coaching live session. And that's what you're about to get a taste of now when I bring over my live charts. So monthly group coaching live is something I have with my course members where they bring their tickers and I study them with them together. So in this chart, there was a pattern on the RSI power zones that allowed you to actually calculate a price target. Did you know that you could use momentum and pair it with price and come up with precise targets? Yeah. So the one that we calculated was in early April. So we met around the time of this green candle, I think it was April 10th, and we calculated a target for 39.13 and it was met on June 5th. And the market kept sailing higher. Guys, are you getting this? Are you seeing how there's so much more to unpack here that I can't possibly teach you in an hour, but that this is the start? Please type a Y in the chat. And this is important because these trades and me showing you the money, I get it. The money you make, the money you have in your trading accounts, it's not just money, right? It's like your blood, sweat, and tears. And you're doing everything you can to protect it and grow it. All right, awesome. All right, now let's look at a different market and then we're gonna go to the live charts for a bit. Currencies, how about currencies? This is the Swiss franc, okay? Now, if you trade currencies, you understand that their pricing is a little different, but it's kind of wild that without me even being a trader of this market, by studying it for one of my students, I found this opportunity that I shared with my tribe. I pointed out the beginnings of this low formation coinciding with RSI power zones and setups that went from 0.9186 to 1.0050. If you trade FX, you understand how the contract pricing works. If you don't, you'll be like me when I realized after checking with my FX trader friend that one contract in this move is $8,600 worth of price action. The thing is, guys, what if you even got a chunk of that? What if you got the middle 5,000 or 4,000? Wouldn't you have been pretty happy? That's what being prepared for trend changes can do for you. It helps you get that middle part of that wave, all right? So now let's take this to the charts. I'm literally going to bring over, I use TradeStation, so I'm going to bring over those screens and you guys let me know in the chat what you want to see. And if you're shy, don't worry. I have a couple examples I'll kick us off with. Out of the gate, we have Ari with SQQQ. So I think you mean the Qs. Maybe you do mean the SQQQ. Okay, so it's a derivative oh, is this the short version of the Qs? Okay, got it. So as I understand it, this is the inverse ETF of the Qs. And let's look at it on the RSI power zones here. So you're getting, like I said, a little sampler of monthly group coaching live. So when I pull up a ticker request that my tribe gives me that I'm not super familiar with, I go top down, meaning I change the time frame to a weekly or monthly just to get my bearings. Now, since this is an inverse of an existing ETF that I know, I won't have to spend too much time on that. So let's just move it back to the daily chart because that history is a little wonky there. So let's take us back for RE and look at this RSI power zones. And I'll give each of your guys' charts like a minute or so, okay? And then I'll take the next request. And we'll do this for a little while. So look back at the history here. I can show you right here that there was a really awesome setup forming on the RSI power zones that would have had you prepared for this turn higher on the SQQQs that would have coincided with the turn lower on the Qs. And again, that's deeper in my system, but it starts with that playbook education. Look at the run up here. Look at the first run up. You guys have learned something now. I'm going to quiz you. What zone did we come to? Simply answer a bull zone or a bear zone. But on this purple hash mark here, what type of zone did we run up to with the first run up here that I'm pointing out to on the SQQQs? Yeah, Edward's got it. Great. Yes, bull resistance. Ari's got it. You're learning even faster. So that was helpful to be prepared for the slowdown that then occurred. And then we had a little bit of pullback, right? And guys, this is a market you're asking me about sitting here. I didn't have this prepared. Look at where we held bull support power zone. But notice we didn't run all the way up. All right. If somebody out there maybe still has their mic on, it'd be awesome if you can dial that back, because otherwise it sounds like somebody's eating cookies or something. It's making me hungry. All right, thank you. We ran up and look, we capped in the bear resistance power zone. Market couldn't keep up with the initial bullish desire and the bears came in, bears on the SQQQ, I mean, okay, and said, nope, turn it back down. Grazed the bottom of the bull support power zone, top of bear resistance, and now turning higher from the bull support power zone. So this is just a little taste of what you can do. So RE, does that help you better understand how you can study momentum on your ticker, the SQQQ? All right, terrific. So let's keep it moving. Like I said, I'll do like about a minute or so. Now that I did the first one, I'll get in the hang of it. Okay, Jeff's asking about FISV. So FISV here is Fiserv, it's a stock. And I'm going to go to a weekly time frame for a moment to understand the history of this. Okay, now I see that after the pandemic low and trading up to the 2021 high, it's lower, a lot like the broad market. Look at how the bear zones have been respected here. That is a deeper concept in RSI power zones. It's extremely, extremely helpful, again, in the full system. But let's come back to this on the daily chart to give us some heads up of where we think it might go. So right now, we are back at this May 12th range. That May 12th range is a very important support. And right now, the fact that we're holding it to meet gives us a little bit of room for the market to kick up higher, for this stock to kick up higher. However, we're within the context of this high here, which not only happened in the bear resistance power zone, there was also a bearish RSI power zone signal back here. So for Jeff here, because we have this little tiny bodied green candle here, there is room for recovery higher, but the most important resistance to watch next is here at 99.87, okay? So observe that, look at that, and see how that coincides with other indicators and everything else you might be using. Okay, great. Does that help you out, Jeff? So just like in monthly group coaching, I always ask the person, did my answer actually serve your question? If not, please ask a follow-up. Okay, AMD for Junsa. All right, so here we're gonna just get our bearings on AMD. This is a popular tech stock. A lot of you maybe know how it moves, and tech has been hit pretty hard, right, with the recent weakness in the market. So it's a little bit more steeply moving down, sharply moving down. Right now, we are pulling back after testing a key weekly resistance here. Where am I getting this level? How am I just picking that out of thin air? That's part of what is in my full RSI Power Zone system. So if you decide to venture into that education, and I'll let you know about how you can do that in a few minutes, then you can learn how to identify something like that too. And look at how we hit that level, but we weren't able to close above it. That's very important. Support and resistance, guys, they're not like cement walls. When I worked on Wall Street, I got in trouble once because I called a level of support, but price had traded through it by like 2 ticks. And they said I had to redo my report. And I was like, what? These are dynamic levels. So if you come to a support or resistance, try to get through it and can't, it's still resistance or support. It just didn't hold to the tick. That's a really important lesson. Please type a Y if you guys follow me, okay? Unfortunately, we are not in a situation where these are all brick walls and cement walls and you can just, have a game of Frogger moving back and forth. You're going to see levels get tested. You have to know how to measure if they're actually being violated or just tested. All right. Coming off of that resistance, look at this beautiful turn down from the bear resistance power zone. Why am I calling weak action beautiful? Because if you want to survive the market conditions we're in now, guys, if you're not used to shorting stocks or doing any sort of trading that's counting on price moving lower, you're probably going to miss out on what I would argue is maybe opportunities of a lifetime. And I'm totally serious when I say that. That's not like a sales thing. The volatility we have now, I have not seen in years. And it creates an opportunity. Now, that doesn't mean you just go trade everything and just throw knowledge to the wind. Don't be afraid to go short. All right. I have some coaching students who are just not used to going short, and we're working on getting them practiced in that so that they could take advantage of opportunities that may arise. All right. So for AMD, I see that we are probably on our way down back to this April 27th low, Jonza, and possibly even lower based on the market and the way it's moving. But I would watch the bear zones as very useful guides. Does that help you out? All right, awesome. Okay, any other markets you guys want to look at? Let me know. I'll take 1 or 2 more now, and then we'll come back to the charts as time permits. So anybody who didn't ask yet, I want to try to get you in first. All right, so there's a question about SPX. So I brought that up here, SPX for Jimmy. So this is just like the SPY that I showed you in my earlier charts on my slide deck. So similar situation here. We're starting to see things roll over. However, I want to see what the short-term rebounds look like in these moves. I would not stick my hand out and sell here if you haven't already. Like, that's not a great idea, because I would rather sell on a rebound and then take advantage of what I think is potentially a next major move lower in the markets. So if you're trading the SPX or the SPY or the E-mini S&P, that's where, like, that's totally my wheelhouse, and I get really granular on the intraday charts, and I do that multiple times a week in my skinny and the mini that I still write. But for now, just sharing this with you on a Saturday without knowing your account size or anything else, that's what I'm going to see here for you, Jimmy, is that, or Jim, that we definitely are coming back in this May 20th range. A little more likelihood to move lower, but from point of view of where to go short, I would watch for a rebound. Okay, awesome. All right, I'll take 1 more and then we will come back to these. UPST. All right, looks like I analyzed this for somebody else recently. That's why I have these lines here. Not too recently. Looks like it was a past monthly group coaching live. All right, so I'm going to just go to the weekly time frame of this chart for a moment. We can all see that we have a weekly chart here, right? Came down to the bear support power zone and hanging out. On the daily chart, gapped lower and is what I call hanging out, consolidating. So what I'm seeing here is that there's sort of a decision area. I'm just going to expand the action. All right. So price is basically living between these 2 levels. So if we see continued weakness below 35.50, Gabriel, then I think that you're on your way back into this May 11th price zone and possibly lower. But if the market's able to hold 35.50 and get above 54.75, I would watch for a move higher. Now notice, guys, I'm still focused on price action first. right? Price action is the candlesticks or the bars on your chart. Momentum is an indicator. It is not a replacement for price. So everything I study and teach on the RSI power zones must be confirmed by price. And I teach that in my full systems, but I'm just explaining to you why I'm not always just starting with the RSI power zones. Does that make sense? Please type a Y in the chat. If you understand that RSI power zones is a tool, it does not replace price, okay? Earnings get adjusted. Earnings get revised. Price does not. Whatever we traded at yesterday, that's it. Locked in history. That's why I love price. That's why the charts make me happy. And that's why the charts, I think, are the best tool to actually have a consistent trading income. And you bring in other tools on top that help you out. All right, awesome. So we'll be back to the charts here in a moment because, you know, I'm really, really excited to be sharing this with you today because I'm extremely passionate about the work that I do to provide traders with the best analysis and education so that they can trade the markets, so you can take control of your financial freedom and live the life you and your family deserve. So, you know, that's also the results my trading family loves seeing too, like David. I installed the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. So let me ask you guys, am I providing value for you today? Are you learning? Are you guys ready for more? Just type a Y in the chat. All right, awesome. So let me tell you a little bit about how you can master RSI Power Zones. So far you've heard about how I've come to really benefit from using RSI Power Zones. Here's more of what my students have to say. I was very impressed with the education Hima provided that came with my indicator. Hima's RSI Power Zones indicator has become the standard in all of my charts, said Rob. Norman shared a day after learning one of Hima's RSI Power Zones trend continuation entry signals. I tested it out on a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your RSI Power Zones training, and the next morning on the market open, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your product knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense, guys? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this, right? You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted, giving back to your community the ways you've always wanted to. Sounds great, right? Spending all the time you want with your kids and grandkids. Great. So here's what I've got for you. So this system that can give you all this, it starts with the winning RSI playbook. So before I give you this opportunity, let me show you the features and benefits that using this ebook and the complete system will give you. So rapid results, right? You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size, $5,000 or $10,000, $100,000, $1 million or more. You can trade this. You can pinpoint your trades faster, so it takes less time. You can get more profit because it's perfect to add to whatever you're doing right now. So it's perfect for beginners, so easy that anyone can do it. Perfect for experts to diversify their accounts because the winning RSI playbook starts you on this journey. First, who is this not for? This is not for those who are trying to get rich quick, right? Like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to just play the slot machines, this is not for you. So who is this for? This is for those who are trying to analyze the markets like the expert and optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. So since you're still sitting here with me, you're taking the time to learn to boost your trading, especially here on a Saturday afternoon. You're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. So like I said, it all starts with a deeper understanding of how the RSI Power Zones work. And the winning RSI playbook gives you the complete rundown and indicator settings along with further market case studies that help you accurately predict turns and large moves in any market on any time frame, as you've been seeing here today. So inside my winning RSI playbook, you'll discover my exact indicator settings that I use in my personal trading, how to analyze fading momentum, how to discover potential turning points, how to compare zones on the RSI with high accuracy, and the key to spotting an impending trend collapse, and much, much more. Now, this is both for beginner and expert traders. And this ebook, it normally sells for $14 on my website. You can grab it there anytime you'd like. But guys, since you're sitting here, you're taking the time to learn to boost your trading, as a special favor for our hosts here today, I've agreed to gift you this groundbreaking book for free. Okay, they've twisted my arm, so I'm giving it to you free, but just for you here today. So you want to head over to himaready.com/pro trader. I'll still be here looking at markets with you, answering your questions to grab your free copy. And really, I just want to thank you for spending your valuable time here with me today. I hope you've been learning and that this is going to be continuing to set you on your road to financial freedom. All right, so I'm going to bring back over my TradeStation charts, overlay it here. You'll still have that link to refer to, but just for today, this book is free, so you want to go and grab your copy. All right, so those of you who continue to ask me some market questions, I'm going to bring them back up. And like I said, I'm going to answer your questions and show you your tickers for as long as they let me. Okay, Kirti asks, any smart chart, smaller time frame, 5 or 2 minute? Oh yeah, we can go to a smaller time frame, Kirti. What ticker do you want to look at? Let me know. Meanwhile, Edward had asked about gold. Oh, Kirti asked about SPY on the 5 minute. Okay, so let's do SPY and let's take this chart to the 5 minute time frame. Here it is. So let's just look back at what has been going on since yesterday. So we had that not so great inflation data, right? And now we saw that the market was weakening into that on Thursday, stayed weak on Friday. Sure, so we can put this over here. So someone is asking me to drop this link in there. So that's himaray.com/pro trader where you can get your free copy. Does that help you out, Edwards? Okay. So coming back to this on the 5 minute chart, Kirti, you asked about this. Do you see how beautifully, starting right here, the RSI power zone's bear zone was just knocking down price action? Look at this, right? Beautiful. Now, like I said, it's not as simple as only trading between the green or the red, but that's a start. And that will give you insight that you haven't seen on the RSI indicator if you just download it on any platform. And by the way, in my full system, I provide the RSI power zones full indicator for download, so you don't have to set it up or try to figure it out. That's in my full 4 zones RSI coverage system, which is something down the road after you get started learning with the winning RSI playbook. But I just want to show you here that come to life. So yeah, based on this, it's not looking good. We'll see what happens with futures coming into Sunday night and early Monday morning, but looks like there could be some weakness still ahead on the short-term 5 minute chart. Okay, there was a question about gold. Edwards asked about gold. So he didn't give me a specific ticker, which is fine. Let's just take it over to GLD. I just happen to have that here. Let's look at it on the daily time frame. So I just default to a daily time frame because I feel like it's a happy place for most traders. If you are a short-term trader, intraday, you need to know what the daily is doing. If you are a longer-term trader, the daily kind of maybe gives you those smaller moves. So on gold, I'm going to expand this out to weekly for a moment because obviously gold has been in a very volatile situation. You meant futures. Okay, no problem. I'll switch to GC. Do it to it. Okay. So it looks like that was a trend line that I had, but I'll just redraw it. Okay. So on the futures on gold, we came to this important support level. So I always mark support in pink and resistance in blue. And this support, again, how I just open the chart and pick that level, you can learn. It's in my 4 zones RSI coverage system, but right now I want to show you how the market has not been able to really push below that. And look on the weekly chart, Edwards, pop quiz for you. What zone are we holding on gold and recovering from? 2 lower green lines. Anybody else can answer to. But I'm telling you, this happens and is so useful so often that the more you study it and the more you look at it on other time frames, it's extremely helpful. Yeah, bull support, exactly. Notice though, on the daily chart, it wasn't the bull support, it kissed the bear support. So on the daily chart, the market is showing that weaker picture, and the weekly was showing you the RSI power zones as per what the weekly bars would do. So this is where it's important that you guys know what your own trading time frame is, like the time frame on which you actually take action versus the ones you just analyze. So for example, for me, I'll just show you my charts here. On the weekly ES chart is where I kind of get my bearings every time I'm going to go day trade. On the daily, I do a lot of analysis, but the 60 minute is where I do my main analysis. So this is a copy of what a lot of my skinny in the markets ES futures charts look like. And then I actually trade on the 3 minute. So I analyze them all separately, you see, and notice for the 60 minute of the RSI, I actually come in and I jot some of the levels out. So coming back to our charts here, again, I'm happy to take any other questions you guys have and any other ticker requests you have here. Otherwise, my time will be coming up soon. So drop your tickers in now. I think it's like last call at the bar here, and we'll look at them together. So something I haven't looked at in a while that I'll look at until you guys give me a ticker. Okay, never mind. I got a ticker already from Gabriel here, CVNA. Oops, CVNA. All right. So CVNA, I really don't even know what this is. I assume it's a stock, but that's fine. To me, as long as there's price and time, we can analyze it together. Very, very weak. However, can you see, Gabriel, that the momentum is not as weak as the price? So the steam going into the downside engine of the stock is kind of running out, all right? So because of that, if you're short, I would just protect your position. Maybe you can exit if we get above those May 27, 31st highs, but I would not count on much more downside in this market just yet. It's a little too oversold, and I'm seeing that in RSI power zones. Okay, Amazon. All right, so for Amazon, on the daily chart, so in a full monthly group coaching live, Jimmy, I will go through all the timeframes. Like I said, you guys are all just meeting me, getting to know me. Maybe you know me already here. I just want to give you a little sampler. And if you come in and you decide to come into my whole RSI Power Zone system later after the ebook, then I'm happy to meet you in monthly group coaching live, which is, by the way, lifetime access. Nobody else really does that. But this is really a joy for me to meet with traders like you who really want to kind of learn something new, later on top of what's working. And this is for all levels. All right. So I'm going to just round out here and leave this information for you so you can see what's in the book. Make sure you grab your free copy today. That link is not going to stay active. So make sure you grab your free copy today. And I see our time here, so I want to be respectful to our host. So I'll look at your questions still, and I'll be ready to wrap up too. If you have still tickers, I guess I'll bring them back until, again, Eric or whoever pulls me off with the cane. Okay. I see tickers still. So I'll keep that link up there and bring this down.
Hima, I had a question also, because you
Sure.
went over it really quickly, and it had to do with your time frames. And Jimmy's asking, can you, if you have time, can you please explain again how to analyze the different time frames? That was something that I kind of missed out on. I started taking
Sure.
notes and I got a little bit behind. So I'd
So,
love that.
well, it's a lot for me to kind of do in a short time here, but I will tell you that's the exact topic that's in the first set of videos in my full RSI Power Zone system. I literally start with multi-time frame analysis. So the key that I'll give you both, Jimmy and Eric, is this, that when you are looking at multi-time frame analysis, first you have to be very clear on what your trading time frame is. For many traders, that would be a daily chart. So let's just take Amazon as an example. If you go higher, I would at least recommend the weekly, but you can start with the monthly for a very volatile market. What you're doing is getting the context of what the RSI power zones are doing there, and then making sure that whatever you do on the daily chart is not disagreeing with the weekly. That's the real key. That's what it whittles down to. But how to actually do that and the steps to take, I have in my system. Does that help clarify, Eric, that we look at the higher time frame so that we're not fighting it? So we know what the RSI power zones there are saying, but we use our time frame to actually take trade setups that work with that bigger picture move on the RSI power zones.
I think that's a great answer. Thank you very much.
Yeah, for sure.
You guys, throw out some more questions for Hima. She's a world of knowledge here, especially with RSI. I'm telling you. I mean, I have traded indicators over time, you know, and we kind of have our favorites and kind of go away from them. I've gone away from them, but after listening to you, I'm going to be pulling that RSI back up because,
oh yeah,
I mean, you know, analysis paralysis is one of those things, but narrowing it down to the one that fits your trading style, like you have, is something that I think people can take something away from. There's just so many times where you see some people's charts and they just have thousands of indicators, and I just don't understand how sometimes they trade against some of that stuff. But I appreciate you for going through all of that.
Oh yeah, you're no problem. So there's a question here that I want to make sure I'm clear on. So when you go to get the winning RSI playbook, guys, it will come to your inbox soon after you go to that page and sign up, then anything you may choose to continue on with your RSI education will be presented to you. It's your choice. You can close your browser or you can read and see what I have to share. So that's what you're seeing, Ari, is that there's other pieces, like you can go ahead and get one strategy that's specific to the RSI power zones. And that's what that next page is explaining. Make sense? Otherwise, just wait a few minutes, email takes time, and you're going to get a link to download the RSI playbook there. So, but yeah, I'm really excited to hear that from you, Eric, because I will say too that there's a lot of momentum indicators out there. I have students who use the RSI power zones and they pair it with winning approaches they have on other indicators. The thing is, none of us should ever say, I won't plot them here, but let's just say we have other momentum indicators here. Let's say we had the MACD sitting here, and let's say we had stochastics above it. When I was on Wall Street, I was forced to write reports that were like, oh, stochastics is down, MACD is down, and RSI is down, so the market's down. Well, duh. I mean, they're all based off the same thing. Of course, they're going to move in a similar direction. How is that helping my client, right? How is that helping the trader? So whether you use 1 or 3 or 15, it doesn't matter. Understand what you're measuring. And my trifecta to the market is price, starting with price. I learned the Gann way first. Time, so that's forecasting. So I have a lot of education on that as well. And then momentum. So for me, these are the 3 main pieces of data, if you will, that I pull from. And then I have various legs and pieces of them. But I'm excited to hear what you'll do with the RSI, Eric. Definitely let me know.
I will definitely. Hima, I appreciate you. We are running out of time. I'm going to move over to our next presenter. I appreciate you coming. Thank you very much. I know people have taken something away from your presentation here today, and I'm sure it'll make a difference in everybody's trading.
Yeah, for sure. Well, I'm glad to hear you here. Thanks so much, everyone. Have a great rest of your day and enjoy the rest of the presentation.
Awesome. Thank you. All right. That was Hima. Now we're going to be moving on to our next presenter here. I want to, yes. All right. Our next presenter here, coming from my neck of the woods where I grew up trading, we're going to be having Todd Bubba Horowitz here in just a moment. He has probably 40 years of experience, and he's had a very successful trading career. As a matter of fact, I've even heard of Bubba on the floor over at the CBOE. He was trading the OEX, which I don't know if you guys know what that is, but folks in Chicago know that's the big dog over in the options room over at the CBOE. Now, I believe he's moved over to my place, which is the Chicago Board of Trade, where we just trade, right? So we are from the same cut of cloth, I guess, if you will.